ecosystems, our stories remain journalist-led, backed by AI efficiency, not AI storytelling. Every fact, every quote, every number, verified, trusted, transparent.
Hello. Morning, everybody. My name is Aditya Malik. An absolute pleasure to welcome all of you to the inaugural edition of BW India Tax Leaders Summit and Awards. Now, this will serve as a platform to discuss, to celebrate, and also to illuminate the remarkable journeys of organizations and pioneers like yourselves who have been championing tax strategies. The theme for BW India Tax Leaders Summit is evolving as strategic advisors to deliver impact. The panelists that will grace this very stage, they will discuss on diverse themes like tax transformation, global reforms, data automation, and governance edge as well. Today's proceedings will start with a keen look at the evolving role of tax leaders in India. And to do that, we are thrilled to welcome masterminds of taxation, enthusiastic audiences like we yourself, and also invaluable content that will enrich the entire day's proceedings. To give you a sneak peek of what today will look like, we have the event AV. Can you please play that? BW Business World, led by Dr. Anurag Batra, Chairman and Editor-in-Chief of BW Business World and founder of the Exchange for Media Group, is the fastest growing business media house in the country, with a network spanning across 25 niche business communities and 8 magazines. BW Business World is proud to be entrenched in various verticals in the domestic as well as global business ecosystems. And with changing times, the team now has massive readership in the digital space as well. In the portfolio, they have 25 niche B2B communities that organize conferences and also forums to facilitate interactions between sectoral business leaders and also create a conducive environment for collaboration. To keep yourself updated about the developments, please subscribe to the BW Business Group magazines. The latest issue, it features India's fittest leaders above the age of 40 on how personal resilience and disciplined lives are shaping India's new leadership mindset, along with the BW Top 100 Marketeer who are redefining business influence in 2025. Also, the upcoming issue, it talks about B School and how they are shaping India's business leadership. Well, along with that, the BW CFO World is an exclusive BW Business World community for finance professionals, consultants, and allied businesses that help you keep yourself updated on the business buzz and also the economic, financial, and industrial insights about the CFO community in India. Today's digital broadcast is being streamed live across all BW Business World platforms, including the social media channels and also on www.bwcfoworld.com. Any picture, any view, any opinion that you share online, please also use the hashtag BW Tax Leaders. A big thank you to our partners as well, our knowledge partner, EYGDS, our event partners, the Thick Shake Factory, Joy Travels Private Limited, Opal Events, Reality Plus, Exchange for Media, IWM Buzz, Impact, Pitch, Pantrum, and Beanley Coffee. Before we begin, my humble request to all of you to please turn your mobile phones to silent mode. Thank you. Thank you so much for doing that. And with that, usi ke saath, it is time to move ahead with the first keynote address, which is on tax leaders as strategic advisors, from number crunches to value creators. And to share his views on the same, please join me in welcoming to the stage Mr. Pramod Kumar, former VP, Income Tax Appellate Tribunal. It's just the morning. We can try and do a better welcome. Na? Let's try again. Chalo, take 2 karte hain. Thank you.
No. Okay. Good morning, everyone. Mr. Rajiv Yadav, Principal Commissioner of Customs, the organizers, distinguished guests, ladies and gentlemen. Thank you very much, first of all, Business World, for inviting me and for giving me this opportunity of interacting with you all. Many familiar faces, many faces I have known for last 2.5 decades, particularly during my association with the Income Tax Appellate Tribunal, and many new people, the people who are going to be at the helm of affairs and in the leadership role in the years and decades to come. When I decided to be here and share with you some thoughts, I was wondering what can I share with you which is going to be of some use to you, and what is there that will probably help you emerge as better leaders in the decades to come, in the years to come. Someone mentioned about the tax leaders in 2030. Why 2030? Maybe years beyond that also. And the thought which came to my mind was that in the next 10 to 12 minutes, what I'll share with you is the transformation in the tax function and the tax machinery that I have witnessed in last 42, 43 years that I have been in the tax world. And what are the lessons that you can take from these transformations about how things are going to be in times to come. When I think about it, 3 images come to my mind. First image, when I visited the income tax office for the first time in my life, and that was way back in 1980. So you can imagine most of you were not even born that time, an overwhelming majority. And the transformation which I have seen in these years, how the world in income tax has changed. Second image which came to my mind was the image of my having first brushed with the international taxation, and that was an aircraft leasing transaction more than 30 years ago. That was a time when you had some major aviation market had just opened. The value system we had in entering into international transactions at that time, and how the world has evolved. And third image, which is very critical and which is going to affect all of you, is what was the role of the tax function at that time and what it is today. From considering what is possible, it has come to, should we do it at all? So these are the 3 things which come to my mind, and let me touch upon them one by one. First thing was, when I saw the income tax office for the first time, it was an unbelievable situation. Can you imagine each return being filed subjected to a scrutiny proceeding? And when someone said we'll have a sample scrutiny, there was a discussion in the press. What nonsense is this? How is it possible? How will you trust people? What do you mean by saying we'll pick up only a few income tax returns for scrutiny? That was considered to be revolutionary thought at that time. And I remember when, as Finance Minister Vishwanath Pratap Singh Saab introduced it, there was a huge discussion that it's going to be the end of the tax world now. What will we do in the afternoons? Our afternoons were only going to income tax office and explaining each return, including those salaried return, which never get looked at now. And then fast forward, come to the life today. Think about the way the records were then kept. Think about the opaque system that we have, which nobody knew about what's happening. And the main job of the taxation department had no idea beyond what they know and what their friendly income tax inspector tells them about happening in the field. To today, when if you really know what kind of information that income tax department has, or for that purpose GST department has about you, probably you may have some sleepless nights. And I think about the offshore bank accounts then, how common it was. I remember the first time I went to Hong Kong, and there used to be only one direct flight from Delhi to Hong Kong, and that was British Airways. So on the aircraft, you could see 20 advertisements in the in-flight magazines about the offshore companies being sold for amounts ranging from $80 to $500. So this was, those were the kind of things. And then today, it's unthinkable. So the world has completely changed. Now, this has changed because of a variety of factors. We'll come to that a little later. Second thing which I was wanting to talk to you about was an aviation leasing transaction, which I had an occasion to be associated with, as at that time I was one of the advisors to Indian Airlines. And don't laugh at this, but it's a reality. The only reason why I got into that transaction was because I was the only man using email. And I'm talking of 1995. Those days, email was as uncommon as you cannot imagine. There used to be Internet Users Club, that kind of an uncommon thing. And Tejpreet Chopra, who later retired as India head of the GE group, was that time a young management trainee in GE Civil Aviation in Stanford. And the linkage, the reason I got into this was that he used to send those drafts on emails, and I was the only person who was using emails. So by default, these drafts would first come to me, then go to Indian Airlines office, and then we got into this business. Now, why I'm thinking about this is, those were the days without the Indo-Irish Treaty. So there was no place in the world where you could have an aircraft rental out of the ambit of the royalties. And what a coincidence if it was, that most of the transactions were routed through Austria, because Austrian treaty, prior to its revision in 1994, was the only treaty as so far as India was concerned, where equipment rental was outside the taxation. And it was happily tolerated. Jet Airways, you have East West Airways, God knows how many airways, everything was routed through that Austrian thing. And because I was handling a public sector company, so of course our value system was different. And my mentor, who was previously in Pricewaterhouse, and then he retired as Deputy MD in Indian Airlines, Mr. N.C. Ghosh. Ghosh was very ethical about it. He said, no, we want it upfront, so let's go straight. And people would laugh at us. Why are we doing it? Why are we paying 10% or 40% withholdings? You can do without it. Because people were doing it and they were able to get away with this. Now think about what's happening today. How much the time has changed. As a tax director, you can think about these things. And thirdly, if you were to talk to a tax person those days, you would only talk about, shall we be able to succeed with this? You wouldn't talk about, is it worth it or is it desirable or not? Today, you have 1,000 considerations. Today, you have a value system. You think of the ESG. You think of the reputation that the company has. You think about how will it be seen in the press. So these transformations should give you an idea. But why did it happen? It happened, you have seen the impact of the BAPS, and then you see the impact of the OECD Pillar 1 and 2. Then you see what's happening in the treaty world today. You have seen in 2025, we have a new update in the OECD. But OECD update 2025, which is going to be part of OECD 2026 version, MC probably is not as dramatic as you will see in the UN Model Convention. How things have changed, how they are talking about the system which gives more rights to the to the source jurisdictions, how they talk about the alignment of the economic activity to the taxation, how double taxation is a strict no, how there is a greater transparency, entire value system in the treaty developments in changing. Then you have seen the MLIs. And then you also think about how the world has changed because of the internet, because of the AI tools and other things. I don't know how many of you will recall this, but if there was one turning moment in this century when I saw the realization that today secrets can't be a secret and people are going to talk about it in a very different way, that turning point was Obama's famous election speech, in which he referred to Oakland House as either the, Oakland House is the building in Cayman Island, which has headquarters of 12,000 global corporations. In one of his election speeches, Obama said, and it's a very famous speech, you can see it on the YouTube or in several things. He said, either this building is the biggest scam in the world, either this building is biggest building in the world, or it's biggest tax scam in the world, and people know what's the answer. That was the kind of awareness which started. Then we saw the Starbucks. We saw the Starbucks, how English people revolted against Starbucks. They realized here is a company which is everywhere, which have their outlets everywhere, but they don't pay taxes. Then we saw the repulsion to the tax structures like the one employed by Google, double Irish Dutch sandwich. The kind of public outrage we saw on the Vodafone. I'm not talking about the Vodafone Indian situation. I'm talking about the Vodafone tax liabilities in UK. So these awareness which was caused, it triggered a kind of pressures on the policymakers and taxpayers to be more responsible to the society, a factor which was not seen earlier. People were only seeing this as a cost. Now they get in terms of the, they see in terms of the contribution also. And the focus from how to save taxes suddenly shifted to how to be a responsible tax citizen. Now, that apart, the fact is that you have huge number of amounts involved so far as taxation is concerned. And people also realize, businesses realize how important it is to ensure that these are honored. We saw about the global reforms and BEPS 2.0, which reshaped the profit taxation. Then we saw Pillar 1 and Pillar 2. In Pillar 2 terms, when we forget about the amount 1 and 2, think of the Pillar 2. There was a time when the economic activity was so much segregated from the taxation that the taxation was being transferred to the jurisdictions where there were no taxes or there were negligible taxes. We saw how Pillar 2 checked it. When they say, no, we have a minimum of 15%, if you don't charge it, somebody else will pay, so you have to end up paying this. Then we see in terms of the treaty updates. And then you look at the technology revolution. I don't know how many of you remember this. Some time back, there was an article in there was a news information in Times of India, and which is a very correct information, about a small claim of improvement to the house property being detected by the AI. Do you know how it was caught? If you just Google it, you will find it. It's a Hyderabad incident. One gentleman bought a house property and he claimed huge expenditure on improving the quality of house property so that he could claim it at the time of capital gains. He came out with a perfect bill, very impressive bill. And he said, look, this is the expenditure I incurred in 2002. Here is my invoice. Please see this. But then, as Mr. Yadav would probably vouch for, today you have forensic labs within the tax department. GST is pioneer in this. They have 2 full-fledged forensic labs. I'm not aware about what's the current status of income tax, but I know of this story. In this case, that bill was put to that scanner on the AI test. And can you imagine the results? The results were, they have used a font which was developed between 2004 to 2005, and it became a default font in Microsoft in 2006. But the trouble is, bill is dated 2002. So imagine the kind of scrutiny which you are being put to. And this transformation is taking place without many of us knowing it. I can imagine that consultant, coming with a perfect plan, giving that bill, impressive bills, everything perfect. But the level of information which is detected. I remember another incident when I saw how, I don't think it would be fair to talk about it. Shortly, I'll tell you the triggers for the exchange of information. The factors which influence exchange of information, those are also alarming. So no secrets are secrets. Today you live in a world where you should be prepared to face the truth. This word is no longer an opaque word. So the role of the tax leaders has completely changed. Technology has changed. We look at the transfer pricing data, machine learning, and then ESG pressures. As I was saying, that there was a time people were not concerned about what is the impact on the society, on the company. Today, they are more concerned about how it will be seen by the public. So you can't come with a plan which looks perfect, but which can lead you to trouble. Another simple example. If you see one common thread in all GAR cases which are reported in last, let's say, 6 months, you will find that wherever this aggressive posturing was taken about a transaction, they had an unwelcome visitor from the income tax department. And when these visitors came, rather than looking at the 30-page narrative by a brilliant lawyer, they looked at the contemporaneous WhatsApp messages exchanged between the parties and email which went up and down. So you have to think about these factors also. Are we going to be aggressive enough to land the whole organization in trouble? Now, when you think in this light, how the world is going to change, then I think there are 3-4 factors which you have to bear in mind. You have to have an adaptation to this. You have to use the technology to its full. And above all, you have to think about a very strong ethical foundation. In tax function, again, you have to realize that you have to have 3 layers of this resilience: strategic, regional, and technology. When I say strategy, regional, and technology, I think in terms of what would happen at the strategical level at the top. How do you make it in terms of the functional specialization at the mid-level? And finally, how all this has to be based on the technology. But then, as we could see in this short, in brief introduction of 8 to 10 minutes, the world in taxation has changed. It has changed forever. There is one thing which is permanent. And that permanent thing is this direction of change. And the direction of change is it's going to be more transparent. People are going to be much better informed. And it's a world where you have to use your mind, not only in terms of numbers, but as a visionary, as somebody taking a larger call for the organization. You have to make the optimum utilization of law, but you have to be also responsible to the society. Now, think in terms of the organization, the transaction structures also. I'm an obese man. I know what does it mean to be an obese man, what kind of problems you face. Just think about it. Every time you go to a lawyer and ask him, is this a perfect plan? Do I go to a bariatric surgeon and I ask him, sir, what works better, an Ozempic or your surgery? You know the answer. If you know this answer, then you should also understand the other answer. Look for the legal options when all other things are exhausted. Today, we are living in a world where APAs, maps, tax certainty measures, your constant involvement is more important. And that's going to be something which is very, 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 very important. I'll not take more of your time. Just one incident I'll remember. One of your colleagues who is in the hall now, and I was talking to him, during this this portion of interaction in the course of the jury analysis of the candidates. And I asked him, how do you look at the DAP profit attribution? You don't have to pay anything at all and you can get away with this if you have a DAP. He said, yes, we have, but we have decided to pay the taxes. And there's nothing new. Sometime back in 2021, I was in a panel discussion in FICCI, and one of my co-panelists was a tax head from a company in Bangalore. And those were the days when the concentrics held the field. And the feeling was that concentrics hold the field. Now, because Lithuania and some other countries have become part of the OECD, so the tax withholding rates are now lower to 5%. And he said it from the dais. He said, although concentrics is in our favor, as a company, we have taken a decision not to go by this. Now, that's the kind of approach which is evolving. We see the same thing in the Sky High, for example. How many of you really believe that someday MLI will not be enforced just because the notifications are not issued? So today, your role is not of a person who is to just communicating that, look, we have a Sky High ruling. Now it's the end of the road. We'll not be getting into it. Your role is of a visionary who is to think beyond it. Not because those rulings are incorrect, those rulings are perfect. These are given by the honorable courts. We humbly bow to this, but because you have larger consideration in mind. And you think as a visionary, you think as a businessman, and you step into the turning point where rules are being rewritten, where values are changing, where judges are putting you to deeper questions. Think, for example, of shell companies. 20 years ago, if you were to ask about shell company, not many people, not many judges will ask you, who are the directors, what do they do? But today they have more questions to ask because they are better informed people. And when I come from my home to this place and I talk to my driver about shell company, he also tells me, हाँ sir, वही जिसमें ना लालू यादव ने अपनी लड़कियों के लिए farm house purchase किया. That's a level of awareness. So you should be prepared for those questions. You should be prepared for that. World has changed. And when I talk to most of you, I get the message that you have got it loud and clear. And the way I see the people working in tax today, and I gave you one example of the DAP profit attribution that, 10 others about the concentrics. I see the change. And that's the most welcome part. I'm so happy to be here with you this morning and to see that this house full of youngsters who have that greater sense of responsibility, who rise to the occasion, going much beyond the letter of the law, take account of the spirit of the law, and they are ready to take the world not as a number cruncher, but as a visionary leader who is going to change the way tax has been looked so far. Thank you very much, ladies and gentlemen. I wish you all the very best in this function.
Thank you. Thank you so much, sir, for giving us a much needed start for the day. And moving ahead, our next keynote session, it's on simplifying compliance, recent government initiatives in indirect taxation. And to talk on the same, please join me in welcoming to the stage Mr. Rajiv Yadav, Principal Commissioner of Customs, Central Board of Indirect Taxes and Customs.
A very good morning. Pramod ji has already set the stage for this half-day event, and I'll be taking up from there. Ben, I would like to thank Business World for organizing this event and for reaching out to me to speak in this workshop or conference or exchange of ideas, whatever you'll call it. When they shared the agenda with me, I told them that I am from the indirect taxes, and the agenda is basically more towards direct taxes, OECD pillars, and the issues which are confronting tax professionals and companies in the direct taxes. So I said I'll speak a bit on indirect taxes, the effort that government is making to simplify them, to bring in ease of doing business, transforming the way the tax department interacts with various stakeholders. I'll talk about that. The first big change which has happened is that, especially with this government, there is no us versus them any longer in the tax department, I mean, the tax officials, the tax department, the taxpayer, the chartered accountants, the legal consultants, and when it comes to indirect taxes, we have custom house agents. We are all part of the same ecosystem, and we are all working together towards a Viksit Bharat. So that is a message loud and clear, which is there among all of us, that we have to work together towards a new India. So that is the understanding of the tax department. Government is big, so spreading this message takes time. So there are aberrations every now and then. You had a recent incident in Chennai, wind track. I don't know whether you followed that customs incident in Chennai. It was a very small thing. I mean, that importer is doing around 1 crore of business in a year. So it was not a big thing, but the guy was nimble. He was using social media. He was on Twitter, and it became into a big incident, and we did not handle it too well. So that is one of the challenges we face, the tax department face, tax officials face, that we are in the world where we have social media and we are up to scrutiny. You have to take quick action, decisive action in an early stage to sort out things. So I'll be moving forward from this. GST, most people are already aware of what is happening because it's right over there. So I'll speak about customs, simplification in customs, more so because right now I'm heading a customs formation in Delhi and Haryana. So I'll be talking about what we have been doing in the customs in the last couple of years. So basically, we have to strike a balance. Our main focus in customs is on trade facilitation and ease of doing business. At the same time, we have a responsibility of border control function. By border control, we mean that there are things which we can allow to come into the country and things we can allow to go to the country, but there are things which we have to block. So now we have to strike a balance between facilitating the trade and also performing our enforcement function. So that is the challenge we have, and we are moving forward with it. And I think we are doing quite well at the moment. The approach basically involves 4 pillars, the 4 main areas which we are using. Digitalization of processes. Like Pramodji mentioned, there was a time when there were paper all around in the tax offices. But now gradually we are moving to a paperless system. One difference which we have between income tax and direct taxes and indirect taxes is that every transaction in an indirect tax is taxed, you know. So in case of GST, you'll have monthly returns or something like that. But when it comes to customs, every time you bring a good into the country, or every time you take something out of the country, you have to face the tax person. So the more these interactions, the more is the chance of frictions or things going wrong. So that is a big challenge in customs, and we are working on that. So digitalization of processes is one area. By digitalization, it is a geographic thing also, like there are formations all across the country. We have remote areas in the border with Burma, border with Nepal, Bhutan, and we are bringing in our EDI system over there also in a difficult terrain. Then there is infrastructure development for efficiency. It is digital infrastructure as well as physical infrastructure, which we have brought in at various places to enhance trade and support trade. Then there is regulatory compliance, which we have brought in. And the compliance these days is basically system-based. So we have a risk management system, which we are using in customs, which is what determines how a particular document will be dealt with. So we have a National Customs Targeting Center, which targets all the documents coming into the country, all the cargo which comes into the country, as well as the things which are going out, and which determines as to how that particular assessment will be done, how that particular commodity or shipment will be dealt with, what level of facilitation is to be provided. In air cargo and courier, the facilitation is almost 90%. That means 90% of the packages which come in, customs doesn't even look at it. I mean, the person just brings in and pays the duty and takes it out. In case of sea customs, where we call it containerized cargo and other things, the facilitation is around 70%. So 70% of the stuff which comes in, it just gets cleared. You pay duty and take out the goods from the customs. There's no examination and even no assessment. And finally, customs works in an international environment. So we have international collaboration, which involves WCO, which lays World Customs Organization in Brussels, which lays down the international parameters, which all customs formations have to follow. I mean, I cannot have a customs rule and regulation which is very different from customs regulation in some other country. The customs systems in various countries have to be able to talk to each other. So we have uniformity in that approach. And we have international collaboration. At the same time, we also have benchmarking by various international organizations, whether it's World Bank or some UN organizations. So they come and they look at our processes, they give us ratings. So we have to be performing well so that we keep on rising in that. And the government, I mean, the top leadership of the government places great stress on how we are doing internationally. So there's a pressure on us to perform better and improve. I'll be talking about these in a more detail. So the flavor now is Turant Customs, A customs which is faceless, paperless, and contactless. So that is what we are looking at. So ideally, it doesn't happen completely because finally there are goods which have to be taken out physically. But the idea is that the importer or exporter and other people, they don't have to come to the customs department. They can interact with the department in a faceless, paperless manner. And things are done at a fast pace. So there we have a risk management system, which is the key, which determines as to how a particular assessment will be done. What is the risk in each cargo which is arriving into the country? It's quite an efficient system. They are able to detect a large number of cases. So that is what it is. And then there is faceless assessment, which is basically income tax also has faceless assessment. Similar process has been done in customs also. So suppose a consignment is coming in Delhi, that its assessment may be done anywhere across the country. So a person may be in Chennai or Lucknow or somewhere who will be doing the assessment, and even the customs and as well as the importer will not be aware who is doing the assessment. So we have brought in this faceless assessment. It's doing quite well. We have to deepen it and make it more strong and robust. There are always challenges because people are always more comfortable dealing with a known person, a known face, which is not there in this case in faceless, because you're just working through an anonymized system. Even the escalation mechanism is an anonymized one. But I think it's a good way forward, and we are moving forward. So basically, it leverages technology, enhances transparency, and it brings in anonymity and uniformity in assessment. The refunds and drawbacks have also been automated. They also pass through a risk assessment process, and the timelines have improved quite a bit. I still feel the income tax is much more efficient than us when it comes to giving refund, but we are also getting there. One difference, excuse me, one difference we have between refunds and income tax and in indirect taxes is that our tax is an indirect tax. So every refund has to pass through unjust enrichment, bar of unjust enrichment. So every transaction we have to establish, the person who's giving refund has to establish that there's no unjust enrichment in this refund. So that brings a little bit of complexity in the refund process. Then more and more modules we are bringing into a digitalization process, like warehouse, bonds, bank guarantees. So these have been computerized, and we're introducing that. This will improve compliance and also speed up customs clearances. E-Sanchit is our system where basically, when we are talking about a digitalized system, all the paperwork needs to be in a paperless format. So E-Sanchit is the platform which allows us to convert all our physical documents into paperless documents so that they can be processed in our system in a paperless manner. And then we have single window project, SWIFT, which integrates all the stakeholders into a single platform. Customs basically is not the final authority for many of the things. We have to often deal with the drugs organization, plant quarantine, if any seeds are coming or any animal product is coming, then animal quarantine. We need no objection between them. So till now, these other bodies were in a paper format. They were working in a paper format. Now we are bringing them online. And in SWIFT, we'll be bringing them onto a single platform where the importer or exporter will be able to see it in a dashboard kind of a system. So work is on in SWIFT, which will actually improve compliance and also speed up the processes quite a bit. The courier terminals, so we are having enhanced computer coverage. Our courier terminals for a long time were paper-based. Now we've converted them into an electronic database, electronic system. We have introduced risk management system also in couriers, and we have almost 90% facilitation for that. In postal, post offices also, a lot of export and import happens to that. Till a few years back, we had around 28 foreign post offices across the country. But in last 3 years, we have expanded this. Customs and postal office have worked together and they've developed a system which is unique to the postal system. And now there are around 1,001 dark Niryat canes through which a manufacturer, small SMEs and MSMEs can do export throughout the country. This also dovetails with the Prime Minister's vision of one district, one product. So what has happened is a lot of handicrafts and a lot of artisanal things have picked up, and there's an export market for them. There's a demand abroad for these handmade things. So this process, GST, as well as this postal Niryat Kendras allows us to export things from anywhere in the country through these dark Niryat canes, which are spread across the country. I mentioned about the land custom station. We have these stations across the in very remote places, including Ladakh side, Burma border, Bangladesh, Bhutan, China. Those were out of EDI, but we have introduced EDI in most of these places. It's a challenge because they don't have internet connectivity. Mobile network is also sparse. So we put up VSAT terminals in these places, and now they are on the same system as other places. So that's a big change. Authorized Economic Operator Program. This is a program where this is done under the WCO SAFE framework. So the broad guideline is of SAFE framework, which ensures that the products move in a safe manner. The integrity of the supply chain is ensured, but at the same time, the speed is also there. So that Authorized Economic Operator is the Indian program between this framework. What happens is that if a person has a clean record, financially they are solvent and they have a good track record, then customs provides them assured facilitation at various levels, which reduces the dwell time and increases the speed at which they can clear their cargo. And this has been a big success. Right now, we have almost 6,000 people who are part of this Authorized Economic Operators and reaping the benefit of this program, including some MSMEs also, logistic operators. And they account for almost 56% of imported cargo by value and 40% of the customs duty paid. Now, once we get the SWIFT on board, then we'll be extending this facility to even the partner government agencies like plant quarantine, animal quarantine. They'll also do a risk-based thing. And the Authorized Economic Operators will be able to remove quick clearances from the other government agencies. But once a person reaches into an Authorized Economic Operator, they need to be very careful. And that's the challenge before tax practitioners. We have a company who are second level of, we have T1, T2, and T3 categories, T3 being the highest. So this company is a leading sports brand. They are T2 Authorized Economic Operator, global brand. And everyone has pressures of profitability and all. And they used some country, or I mean, they fudged around with country of origin. Now they have had a bad case against them. And they are in the process where they may lose their status as an AO. So there's a reputation loss, which will be there. And there'll be other losses also in terms of increased time for clearances. So one needs to be careful. Once you reach an AU and all, you follow all the processes and are mindful of the various things and not cut corners. So, and then we have started with 24/7 custom clearances at seaports and various ports, even in ICDs, airports, direct port delivery. I mean, a person can, some people who have the status, they can just go and pick up the cargo once it gets off the ship, right from the port itself. It doesn't have to come to any customs formation or port or anything. You just pick it off the wharf and take it out. And the reverse in case of export is direct port entry, whereby you take your container, which is pre-authorized, pre-risk assessed, and just put it next to the ship wharf, and from where it will go abroad. We are trying to extend it in ICDs to the train also. Let us see, because trade has not demanded it, but customs is willing to give this facilitation to the trade once the trade asks for it. Like I mentioned, there is always a balance between our border control functions. So even though we're facilitating, we need to check and ensure the integrity of the supply chain. So we are using non-intrusive inspection technologies for cargo, e-commerce parcel and passenger baggage like scanners, mobile scanners, rail scanners, XPIS, which is an X-ray kind of a thing, CT scanners at major customs formation, including airports, customs ports, ICDs. Sophisticated image data analytics tool are being deployed to reduce human intervention. We are raising a canine squad also, which are basically trained for drugs, interdiction of drugs at various customs formation. We have a laboratory, sophisticated laboratory, Central Revenue Chemicals Laboratory, which now is accredited as a regional customs laboratory in the region. A new state-of-the-art training academy has come up in Hindupur, which is close to Bangalore, almost 90 minutes from Bangalore, which spread over 500 acres. It's a state-of-the-art. It has already been designated as Regional Customs Training Center for Asia-Pacific region of WCO. This will meet the training and capacity needs of India as well as of the region. And even, it's not just for the government, even people from the trade can go and do courses over there. We ran a course for authorized economic operators. There'll be course for GST professionals also, which will be running. Recently, I'll talk about that. In GST, we are coming up with an appellate tribunal, GST appellate tribunal, which is coming up. The new members, the judicial members as well as technical members, they had a 2-week course at this academy in Hindupur. We have international obligations. So India has implemented the WTO Trade Facilitation Agreement well before the stipulated timeline. And then I mentioned about the international benchmarking, UNESCAP, as well as OECD Trade Facilitation Indicators. They have benchmarked us, and we have been continuously improving as far as those benchmarks go. We have mutual recognition agreements, free trade agreements, customs cooperation agreements with various other countries, partner countries. To reduce litigation, we have enhanced our, this is one big facilitation which we have done because government is one of the most aggressive litigants, which increases the cost of compliance for sector. So we have enhanced these limits so that we reduce the number of cases which are going in High Court and Supreme Court. National time release studies reflects that continuously the import and export release times has been decreasing. And we are using, we are using pre-arrival processing, risk-based facilitation, and benefits for our authorized economic operators. The continuous commitment to streamlining process, enhancing transparency, and strengthening international collaboration underscores India's dedication to fostering a conducive trade environment. The most complex thing which we face as senior officers is to bring in uniformity in assessment. I mean, if the same cargo comes in Chennai or Delhi or Lucknow or Kolkata, it should get the same treatment everywhere. Similarly, a passenger who comes from abroad, he or she should undergo the same kind of a process. And it should not be dependent upon the person who is there on the other side, you know. So that is the big challenge which is there before us. Now, so finally, I'll be talking about GST. You're aware about GST 2, which is the most recent reform which we brought in. And we started it on September 22nd of September this year. It's a transformative thing. I mean, GST came in July 2017, and it's been undergoing changes every now and then. But that is the nature of it, and the government is very prompt. Which also, I mean, if you're as chartered accountants, you are dealing with GST issues, you'll realize that it's a challenge also to keeping up with the processes because they're changing so fast, you know. So in this, the most recent one, GST 2, it's a relief for the common man and boost for business. That was a tagline which has been given. What it has done is that there were 5, 12, 18, 28%, 2-3 minutes more. There were 5, 12, 18, and 28% bands which have been compressed to 3 bands of 0, 5, and 15, and a demerit rate of 40%. With this, most costs have come down. It's been a success. What we have seen in last 2 months, even though the tax rates have been brought down, our tax revenue is still holding on. Let us see what December brings. So GST tax has been holding on, but it has had an impact on customs tax because customs tax involves a basic customs duty and a GST tax. So we have seen a downfall in customs, but as far as pure GST is concerned, from GST assesses, our tax is still holding on. So that means there is spur in demand because of the reforms that we brought in with GST 2. These changes have made GST simpler, fairer, and more growth-oriented with focus on common man, labor-intensive industries, farmers, and agriculture and health. The technology is leveraged for easy registration, quick refunds. A big problem has been the inverted duty structure and the credit flow being accumulated at some places. So that has been sorted out to a large extent by removing inverted duty structure to smoothen the cash flows. We have introduced various conditional small amnesty schemes in GST at various points, you know. Because it was a new tax, compliance was difficult. So we have had this amnesty for interest, penalties, late fees, which had helped various taxpayers. We've reduced government litigation by fixing monetary limits for filing appeals. We want to reduce litigation. The economic commerce operators, they were required to pay 1% TCS. That has been brought down to 0.5% to make things easy for them. Government has been issuing clarifications from time to time to explain things and to make things easy and uniform. Registration has been a difficult process, and we get maximum complaints from registration. Now we are trying to simplify that procedure, make it Aadhaar-based, bringing geofencing, and try to do away with physical verification of the premises before issuance of registration. That process can be done later on also after that. So we are introducing Aadhaar-based biometric validation and geofencing. You're aware that the growth of GST has been much faster than the growth of GDP. So that means a more efficient tax collection system. And one of the reasons for that has been the GSTN system. The GSTN is a big part of the success story of GST. And e-invoicing is one of the things whereby earlier we said that companies above 500 crores have to do e-invoicing. This limit has been brought down to 5 crores. Companies above 5 crores have to do invoicing. This brings in a lot of efficiencies. I mean, once you do invoicing, most of the returns, monthly returns are auto-prepared, auto-populated by the system itself. So this thing can be brought further down. GST tax system is using artificial intelligence, machine learning, and data analytics on a large scale for enforcement function and for compliance function. And lastly, I would say that we have introduced GST 80 appellate tribunal. So now what happens is right now, for every appeal, you have to go to High Court. So with this appellate tribunal coming in, it should start functioning anything. I think maybe in January they'll start. People have already been appointed, all the members. So they're just looking for some infrastructure has to come up. With appellate tribunal, there'll be a big relief in terms of litigation and dispute resolution. So this is what it is from my side. If there are any questions, I'll be happy to answer. Thank you very much.
Let's say the income tax. If I spend anywhere, any money, whether it's a property or anywhere, investment shares or anywhere, my 26 years, all will show that. Because the possibility is linked to the plan or the other. So it is there. Similarly, the GST cases can't it be the sales, income tax, GST. Interlinked that just area of to mention context, it's a very wonderful job for the city. The hurdle is the both importer, Indian importer, and the foreign exporter. Or Indian exporter or foreign importer, both parties should be of AEO status. Then only the benefit will be available. AEO prolong, it's a very difficult to get the certificate. Not it the MSME, the five-star status holder. Those who are exporting 500 crore, 2,000 crore, under the DGFT foreign trade policy. So automatically they should be considered as a AEO program. So that more and more exporter or importer can be part of that, member of that AEO program. So these are my views.
Thank you, sir. You asked 3 questions and very different ones. Okay, I'll come first to the GST fraud. I mean, the amounts look huge, 59,000 crore, 80,000 crore. But when you see, compare with the kind of taxes we are collecting, it's not huge, you know. I mean, point is, there's a thing between enforcement and facilitation. Just to catch one person, I don't want to inconvenience 99 other people who are the honest people. So there has to be a balance between them. And we know who these people are. It's not that we don't know. I mean, everything is connected. We have information from all the sources. We have access to income tax database and all those things are there. But the thing is, these guys are very fast. Basically, they create a fake invoice system. They move it fast through various layers. And either they'll take a refund by creating some fraud export, or they'll give it to a genuine person who has a genuine liability, where this thing is used to reduce your cash liability in the outward supply. So this happens in a very fast pace. By the time, you know, by the police comes, those people have already See, I mean, it's an incestuous system. The way you have an Aadhaar, you'll get a PAN. If you have a PAN, you'll get a GST. If you have one, you'll get the other. So it's very easy to get registration. That's not very complicated. I mean, yeah. And authorized economic operators, MSMEs are part of that. I mean, it's a complex program, but then government has to be careful before issuing that. And those standards are WCO standards, actually. And when we have a mutual recognition agreement, then suppose I have it with France, then an AEO here will be recognized by the French customs also. And it happens, and we have this kind of a thing with almost 30 or 40 countries. So that is already there, what you mentioned about. Yeah. Thank you. Anything else? Yeah, please.
We'll take it offline, sir.
Last one.
We'll keep it very short. We'll take only one. That's it,
Last.
because
Yeah.
we'll give it 30 seconds, quick.
Pardon me? See, that is a Ministry of Commerce. I don't look at that. It's nothing to do with customs. It's a policy. I mean, it's something between our Prime Minister and their President. They're working at it. It's been taken up at the highest level. So I think some resolution will come in. Yeah. And there are people who are doing well even now. One last, yeah. You. We can talk this separately. Okay, thank you.
Thank
you
you.
so
Thank you
much.
so much, sir. Thank you. Thank you. Thank you so much, sir. And I'm very sorry for the buzzer and thing that you said. There's so much information that all of you have. And we want to keep a check on all of that. There's only a request to you. And I apologize first time. That's it. Chaliye, that was Rajiv, sir, with his views on simplifying compliance. And the next one, it's a tax power panel on tax at the crossroads, global reform, digital disruption, and also strategic relevance. While they set the stage up, I will introduce a panelist and a moderator as well. First, our moderator for this will be Abani K. Jha, Group CFO, Satvik Solar. The panelist will be CA Pushpendra Dikshit, Vice President and Global Tax Head, PVR Inox Limited. Alok Parekh, Director, Tax South Asia, Warner Bros. Discovery. Joining them is Neha Tewari, Director, Transfer Pricing, Tenneco. Also joining them is Chandan Agarwal, Head of Tax, Dabur India. Also joining them is Chandrika Chaudhary, Regional Head Taxation, Asia Pacific and South Asia, Intertech India. And also joining them is Rajesh Gosain, Head of Tax, Oppo Mobiles, India. For all our moderators and our speakers, we've got a timer here. Please keep a check of that because अगर आप उसका ध्यान नहीं रखते हैं, they'll play a buzzer and they'll just ask me to stand here and stare at you. That's very embarrassing for the both of us. That's it. And after this, we will move ahead with tax transformation. But उससे पहले, global reforms, digital disruptions, and strategic relevance, discussing all of this at the crossroads. चलिए, let's please welcome our panelists and a session chair for this one. आपकी जोरदार तालियों के साथ.
Should we start? So we have given 35 minutes and the subject is very, very huge. Perhaps we may not justify, so we can take some questions, which I've already noted down. But before I start and to go to the panelists, I will tell you one story where they were talking about Indian tax structures. I was the part of Piyush Goyal travel to Germany and France, and we were talking to the businessman, local businessman, and everybody was asking that Indian tax structure is improving, but there are miles to go. Because there is, if you see, many of you would have gone to Thailand, Singapore, and if you see the entire textbook of that countries are just in one book, right? We are too far of that. And when the things become very complicated, compliances also become very complicated. It is a related subject. So We have heard Pramod ji has given a kind of background already, but on the cost of repetition, I will say that the tax environment particularly become very complicated in the view that we are talking a lot frequent about artificial intelligence, the vigilance, the forensics, etc., etc. But then there are a lot of new regulations which are also on the horizon. So without wasting any further time, I would start with Alok. Uh, so Alok, in the context which we have discussed in since morning today, how can tax leaders reposition themselves from compliance sales managers to business enablers in front of the board? What is your thought on this?
Thanks, Obani. The water is actually sealed right now. Otherwise, I would have first taken some gulp of water because we are talking about the board. So the times have really changed right now. If I look at the start of my career when it was more than 15, 16 years back, it was more of compliance driven. The tax used to be more of compliance driven. I have like experienced it myself. The time what I'm experiencing it right now is we are at the forefront because board is at the forefront. So uh, the tax leader or the tax team are a kind of in-house advisors for the board. Why so? Why I'm saying so? You are entering into a business transaction. What is most important for you? Revenue, which your sales team is going to get it for you, and cost, a huge laundry list. If you look at other elements of cost, all the cost elements are kind of, you can foresee them. It can be budgeted. Of course, you can budget the tax cost also. But when we talk about India, I'm sorry, I'm not getting against Indian revenue system at all. But when we talk about India, tax is too litigative. The tax rate is 25% to 40%, depending on the company, like domestic company or the foreign company or how the transaction is. But this is not end of the road. It will factor into 40% of the cost, but because of the litigation, because of certain views and positions, it may scale up more. So the board or the business teams look at the tax team before initiation of any unique nature of transaction, that is a new transaction. They come to us, they seek our views, what best and how best you can structure it so that we can foresee the tax cost onto it. Of course, we'll foresee the litigation costs also onto it. And then the board can look into how much profitable the transaction is. And they can have a, peaceful night's sleep, at least from the tax front, because other costs are also quite manageable. So this is how the tax people are, in a sense, upfrontly working with the board to structure the transaction at the initiation stage itself.
Thank you, Alok. Yeah. So I would come if I would have some time left back on that, but I will go to Pushpendra to have further questions on my right. So Pushpender, it would be great idea on top of what Alok has already mentioned. So beyond effective tax rates and liability forecast, what are the non-financial data points like ESGs we have talked about, litigation success, reputation risk, etc., that you now bring to the board? How did a recent event in the various cases decided by the various courts changes what the board considered material from tax?
Good morning, everyone.
And by the way, I just a round of applause for Pushpender. He is just finishing writing a book on tax subject. So
thank you. Thank you. So I think it's a good question. And first of all, kudos to the government for unprecedented investment in technologies. I mean, industry is, catching up because government is way ahead in terms of the technology, be it income tax, be it GST. Look at the beauty, the way, sites and things are working. And my, comments are more so with respect to the future. Uh, we just heard, sir, about transaction taxes he talked about, but the fact is in time to come, each transaction is going to be under scanner. And the best way to do that through right technology. And if we take care of that transaction level right from the beginning, we can easily sail through, be it the board, be it the revenue authorities, or be it the cross-border thing, because we are really living in a borderless world. So a lot of things which are in the offing, like OECD Pillar 1, Pillar 2, we spoke about. A lot of people are knowing about it, and we will definitely, take a plunge in practice also, because it is not yet operational full-fledged, but the indication is clear. We are living in a borderless world, and we need to only have one truth. That truth continues all across. That's the way we will be able to survive. We will be able to have good revenue audit closure, and we will be able to convince the board also about the proposed transactions quickly. Like if I am aligned with OECD Pillar 2 approach, which says minimum taxation across the globe, wherever we plan. So businessman is now clear that we need to end up paying 15% tax regardless of the place I'm going to operate. I have to that ESG mapped to that, right allocation, transfer pricing, everything has to be, well aligned with that, well attuned with that. And then I think we can really look forward to.
Thank you, Pushpend. So I'm coming back to Neha. So Neha, we just heard panel views on how tax may influence on our business decisions. Let's talk about tax, transfer pricing provisions that generally runs into the litigations. What signals tell you that the transfer pricing position should be escalated to the board for redesign rather than continued defense?
Thanks, Bani, for the question. And I'm glad to be here. Thank you for inviting me here. And Business World, same as well. So Bani, your question, what triggers all of this? And this is something which is coming from the uncertainty that flows around in case of the tax positions that we take, the transfer pricing positions they take. Now, looking at the key triggers, I think what for a tax leader, the triggers can be from the recent assessment data that goes into public. Watch out for those data. Look at the positions that you have taken, sensitive positions, safe positions. It is not only an year-end exercise anymore. No, we are there on the board with the finance teams, with everybody. So it's not only a compliance function as of now. It is you enable the business at some point in time. So review your positions and see where the anomalies are, where the the documentation is lacking, where the gaps are. So that becomes a key trigger. And last but not the least, what I see happening around is if you see a consistent position being challenged every year, say for example, say an auto industry, there are distributors, there are royalty payments, which are some key aspects of any manufacturing. And these are some cases which are prone to litigation. So take those assessment data, take those positions that come into the market, take the ITAT decisions and everything as a basis for evaluating where your positions are and see if there is something which is triggered there. So I think all of these points that you evaluate on your own, first looking at the positions that the tax authorities are taking, looking at your own data, not only at the year end, but during the year, as and when you do the changes in the business. And also the third thing is looking at certain positions that have been taken on an aggressive basis, which can enhance your uncertain positions. So all of this, I think, becomes the key triggers which you can take as a tax leader to the board.
Yeah, I want to review that. Equally. So my
Sure.
question was largely around that when, as a tax head in our organization, you decide that now this is the time uh, related to transfer pricing or litigations. Now it is a good time to get update to the board or give them the appropriate information that this is a kind of recurring, incurring all the time, and we should take change in the position. I mean, you can't be specific or just kind of ballpark idea.
Right. See, it again, as I said, it is not an year-end exercise. The triggers will not only arise at the year end. So when you go to the board, I think, say, just as a high-level example, look at a quarterly analysis of the data. Review your positions on a very regular basis. Say quarterly is a good regular mechanism. And then see that the gaps that you find in the data arising out of any kind of situation. For example, you've taken on a new business. Do you have a sufficient documentation in place? Do you have the rationale which is built into both in substance as well as in form? So those are the things that you keep evaluating. If this triggers something, go back to the board,
Sure.
say, we are not stopping you from business, but we are trying to enable that you do the business in the right way and you have the positions in place so that you're not litigated down the road.
Sure. Thank you. Thank you. So I would now like to go to Chandan. So Chandan, if you can tell me about India now has green credit program, right? Can you give a practical example of how the tax function is evaluating a potential investment, not just on ROI, but on eligibility for these new age incentives and its impact on the company's overall ESG tax position?
This green environment, as what we commonly understand in a situation, is like you're a tax person and you are supposed to do tax compliance in industry, and you're saying about green tax. The first thing comes in mind: is there any provision in law which says in income tax about green tax? So, is there any codification by government which allows you an incentive if you were to comply with certain green? So, what is green is that there is the world is facing from a high carbon in the environment, and so you need to decarbonize. So what are the policies which government has come up, whether they are incentivizing or disincentivizing? So those policies you are checking on, and whether there is a relevant tax law, whether it's income tax, GST, or be it any other law, you might need to import equipment also, so that your company's carbon into the air, it reduces. So are there any laws in India to say about this? Is there any synchronization? So what it came to us in Dabur Group, like, this ESG, like we implemented in 2022. And I was just wondering whether this ESG has any advantage to me. Does Government of India warrants ESG? Is there any statutory law on ESG in India? I found there's no answer to this. Why company does ESG is only because it improves their global rating. So they are FIIs who are investing in your companies. You need to say, look, I am ESG compliant. I don't also, before that ESG, I don't employ any child labor. So that's a good global policy. Now, similarly, ESG, environment, social, and governance. Now, that's a very important thing that, okay, you're protecting environment by not releasing carbon into the air. So what steps you did? So there are a whole list of questions. Now, there are agencies. In India, currently, there is no agency who does a ESG accreditation. These are all global companies who does ESG accreditation. So you need to engage, work with them, and they will come up with a host questions. They'll go to your factories, they'll study the norms. There are raw materials which you cannot use at all. They are banned because they are poisonous to the environment. And so in this way, you work with those teams. So there is an increased cost of business when you are ESG compliant. On a tax side, ESG just offer 2%. So on a scale of 100, tax contribution is just 2 to 4% on ESG. That, look, Pillar 2 says minimum tax is 15%. So if you are above 15, you are safe enough on a ESG that, okay, you have met some goals. And second, you're not operating through any tax havens. That's another requirement under ESG. So when you are on a global tax rate of above 15, let's say you're 18, 19, you're not operating through Cayman Islands and the tax havens of the world, you get a fair rating on ESG on tax side. I was just wondering whether there is a universal, so in the ESG, there is no universal tax rate. Like Pillar 2, we say 15, but in ESG, they have not mentioned any tax rate. So it goes more by the local laws. So that was on the ESG, but I'm a company like let's say, releasing more carbon in the air. Now, what I do to get rid of this and to minimize, I buy a carbon credit from other companies. People who are, they have got points on the that they have released lesser carbon in the air. So I buy those credits. So the company which sells the carbon to the other company, their tax rate in India is subject to 10% only. And on that 10%, they will be not allowed any deduction. So government is doing some bit, I would say. Pollution, environment is still a big concern. Income tax, as of now, apart from this 10% tax, has nothing much to offer. I think it's a long journey. Every year when I review my tax return for the company, for the group, I always see like what attempt the Dabur Group took to lower their carbon release into the air. And each time the question comes to me, oh, this year I released this much carbon, I brought down this much, lower plastics, lower carbon, but there's no incentive to it. So there has to be an incentive program. I think government need to work on this to say that, okay, we need to be environmentally friendly. These need not be just in words. It needs to be put in action by policy. So that's what my say on the green tax in India.
No, thank you, Chandan. So, kind of related question, Chandrika. So we have seen since morning, people are talking about pillar two and multiple times. So what is the single biggest gap you see in Indian headquartered MNEs today? Is it data system, skill set, or interpretation?
I think all of them, because pillar one was complex. Pillar two is going to be a bigger challenge, for implementation, because the way it has been designed and structured, it is very complex. It is very complex, and the challenges that are there is, first of all, India doesn't have a legislation as of now. So what the MNEs, India headquarter MNEs currently are doing, they are playing a catch up. So wherever the it has been implemented elsewhere in the world, they will have to comply, because pillar two works on common approach. So if you do not have any laws enacted in your local jurisdiction, you have to go with the flow, what other jurisdictions are doing. So you have to do all those calculations, and you have to prepare yourself. So the first challenge is the complexity in calculation of the top up tax. Then the concept that how you will pay these top up taxes is the first is QDMTT. So your local jurisdiction has to have that enactment that wherever the tax is less than 15% ETR, so you have the right to recover it. The second rule is, if you don't have, your parent entity will have to recover through the IIR. The third leftover is UTPR. So the entire mechanism as such is very complicated. Then last but not the least is, you in MLIs, you will soon have the STTR, subject to tax rule. So how you will calculate finally and how you will close the calculation is very complex. Then you need all the technology to do all this, to capture what is happening in all the jurisdictions where an MNE functions. Then determination of the set offs, where you are paying QDMTT, how you are setting off. Then you have to examine whether you fall under any of the safe harbor rules if your jurisdiction enacts it. Now for India, typically we have MAT. So MAT, it is not even qualifying as a credit there. So basically, the government has to now look for shifting the MAT or any other incentives that we have, which is making the ETR lesser than 15%. So they have to look at, giving you more incentives in terms of subsidies, in terms of capital infrastructure, in terms of, labor that you are employing locally. So all these are the challenges that I see, that India needs to be geared up, and elsewhere in the world also. Because many territories have also started the registrations and implementations and all that. But I think India is not bothered, because one, we have very high taxes locally. And then a cost benefit has to be done. So if you are implementing in all these three, IR, UTPR, so it comes with a cost. You have to train your own people. In the tax government also, they have to train, and they have to come out with a specialized team who understands it and who will actually see how to implement once the law is there. So I think that's why, Indian government is just waiting and watching, because maybe they don't see much merit in, getting into all these complexities, and ultimately how much are they getting out of it?
Thank you. Thank you, Chandrika. So, our government is listening. They are in this room also. So there is some communication will happen back to Mr. Mrs. Nirmala Sitharaman. So I come to my good friend Ajay now. What is this buzz about strategic restructuring trigger? Right. We have seen Indian tech and pharma giants re-domicile for a large Indian MNE. Do you think it would need to review the holding structure under Pillar 2? Also, how do you foresee the geopolitical situations playing out on Pillar 2 implementation?
Thank you, Mr. Jha, for your question, and good morning, everyone. Of course, the whole world is talking about Pillar 1 and Pillar 2, and for many countries, it has already seen the light of the day. The laws have been enacted in those jurisdictions, barring a few. When it comes to reviewing the holding structure of the companies, of course, there have been time in last decades where the focus was more on tax haven selection of countries for IP sort of things. Your patents are lying in those countries where tax is practically nil or at a very low level. Then there were certain finance companies also, which were choosing such jurisdictions to earn money in those jurisdictions and paying practically no or low level of taxes. But now Pillar 2 coming in, probably, the law remains that 15% tax has to be ensured at the group level. And of course, it needs to be reviewed jurisdiction by jurisdiction. That is what the law says. Now, if I talk about a group, probably, which would have established the IP companies in low tax jurisdictions, the real question now is it really required for that group to continue holding that way? Or really the subsidiary relationship needs to be changed? It needs to be moved to those jurisdictions which probably are good in terms of the reputation, business-friendly environment, labor laws, and more strong regulatory environment. So this is one aspect. Probably I'm of the strong belief that organizations will start thinking about all those things. If I talk about India, India as a country has not in a big way talked about implementation of the Pillar 2. Of course, indications are around because many Indian companies which are headquarters in India, they operate at a global level, and more we can see on the IT side. And of course, there are other sectors also where the companies just go do different jurisdictions. So those companies have already started doing it because, if India is not has not implemented Pillar 2 as of now, but yes, on the other side, there are a lot of other jurisdictions already implemented. So for example, if you see the notification of 13th of August 2025 issued by MCA, the accounting standards are being revised just to give a momentum to the disclosure requirement. If you are a company who may be paying taxes 15% in other jurisdictions, you need to disclose it here in terms of whether you pay it QD, MTT, or whatever name you pay it by. So those things will come in. Your second question of geopolitical situations, we can talk about or think of one country, probably not difficult for me to name. But yes, if the big countries are not becoming party to Pillar 2 for the time being, does it stop the way? To me, it seems practically no. But yes, there may be bottlenecks to the whole processes here also, because, if such a bigger economies are not falling in the mainframe, probably will not yield the purpose for which the Pillar 2 was all thought about. So I'm hopeful that all the jurisdictions, the bigger one, will also come into the mainframe.
So thank you, Rajesh. We are in round 2. I would request panelists to have a short answer so that we can cover round 2 also. And in this, I will come back to Chandan because we are talking Pillar 2. So Chandan, I just wanted, and for everybody's consumption, implementing Pillar 2 require data from finance, legal structure from corporate law, and interpretation from tax. Can you describe a specific friction point where alignment between these three functions broke down and how it was resolved?
See, we are an Indian headquartered company, meaning we have gone out of India. And so we are an outbound company in that sense. And we need to globally deal with Pillar 2 regulations. And as we see Pillar 2, like India as clearly is not on Pillar 2 as of now, similar to US and China. So these are three major economies where the trade is done. Only Europe, to a large extent, is on Pillar 2, and some African countries. So there's a lukewarm response globally on Pillar 2. Now, when you say Pillar 2, like the first question which came to our mind, like we are operating out of 32 locations abroad. In which of these locations my tax rate is below 15%, where I do substantial business, or I accrue profits, or I have assets? Now, if my answer is, let's say I'm 15% across these 32 locations, then I need not worry on Pillar 2 at all.
Yeah.
This is a mere compliance tool then. And so because locally you're on 15% tax, Like let's say, for example, UAE is a global tax, UAE is a tax rate of 9%, but recently they topped up with 6% more, QDMTT, making it to 15. Now this tax, what it means is 15. So I need not worry on UAE at all. But let's say I'm working on, I have business operations out of British Virgin Island, BVI, Cayman Island, or Isle of Man. These are tax havens with nil rate, though they are also coming up with Pillar 2 rates. So there's no pass by there also. There's no green channel as such, because out of 200 countries in the world, 140 has promised to implement Pillar 2. That's a quite sizable number, meaning to say that 15% is a threshold global rate, akin to some sort of a custom rate. Threshold is 10%. So here the tax rate is 15. Now, for us, the difficulty was that, as a company, as a headquartered company, how do I figure out my cost actually? Because you need to put resources actually, or either internal or external. So there's a cost involved in relation to Pillar 2. For people sitting in this room, the first Pillar 2 report has to go out by 30th September 2026. So any company in the world, they need to send a GIR report by 30th September 2026. That's the first requirement on Pillar 2. So we are out of India. We are not on Pillar 2 India, but let's say in UK, UAE, and there are 10, 12 locations more where I need to file that report. And where that report will be filed, we do not know. Whether it will be filed in India or to where my subsidiaries are. So it's a moving thing actually in that sense. Now, as far as the data collation in Pillar 2 is concerned, this Pillar 2 is more based on book concept, not on tax. Because tax can vary nation to nation, but a book concept means your accounts are drawn as per IFRS, which is a globally recognized accounting standard. So there's a similarity and the standardization. So more or less the treatment of expense, income and expense is more or less same actually. Deferred credits or same, there are some nuances around that. So to source the data from across the geography, foreign exchange differences, to classify on 31st March, what would happen to those differences, deferred tax credits, some of the entries, subsidies might be in losses, and how do you offset that in relation to a particular territory? So there are differences actually. One can go into nitty-gritties, but by and large, if you are above 15%, you are safe. But let's say the tax rate of a country is 12%. The question comes, are you Pillar 2 compliant? Now, Pillar 2 has given a carve-out for the first 3 years. They are called safe harbors. So even if you are lower than 15 to 12, and if you happen to engage certain more manpower in that country, or you engage more fixed assets, so you get a concession actually. That concession can range from 1 to 3%. So despite being 12, you are still compliant with Pillar 2. So that all need to factor all these. And it's an interesting learning. And as a tax person sitting in India, we learn about how different geographies work around. You become more familiar with the business across the world. So the learning goes up. And if a person sitting in India, his learnings goes up, the tax department would be also in position to similarly scale up their learnings.
Thank you. Thank you, Chandan. I'm running out of time, but I have a very interesting question for all the participants in the room. I'm going back to Neha. Now, Neha, you have seen since morning that tax departments are very proactive on the adopting technologies, AL, ML, artificial intelligence, forensic science, etc., etc. So, how can corporate reverse engineer this?
Well, I think reverse engineering is quite a negative word. I would say learn from it. Learn from it, use the same lens, use the same technology. And even before the tax authorities pick it up for you, you pick it up for yourself. I think a better defense is much better than a litigative position. So I think this is how, for example, say again, I will continue with my example of an auto industry because I come from there. So say, for example, you have a management charge coming in every year. Right now, we know in the Indian tax landscape, it is a very highly litigative position. So, do you want to, want tax authorities to pick it up, or you want to prepare yourself before even you file the return? Do you want to see what kind of benefit documentation that I have that justifies these charges? Before a notice is issued to you, having 10 those standard questions, which is, pardon this, goes to every taxpayer. Do you want to prepare yourself? I think that is where, this is just one example how you can reverse engineering it. Maybe, I would say learn from it and use the same lens to see the data.
Thank you. Thank you. Chandrika, one of the questions from GST also. So taking GST litigation as one area, beyond robust documentation, what is one unconventional proactive step a company can take today to reduce future exposure on litigations in GST?
I don't think any.
Okay.
I don't think any, because the fact that, the government has launched more than, I think, 800 notifications since the law came, GST. So it is ever evolving. So I don't think you can actually,
Demand with-
you can actually come out with a non-conventional idea or out of the box thinking to avoid GST litigation, number one. Number two, I don't know why advanced rulings are always so negative. I don't know. So there is one enthusiastic company who wants to understand how much tax you want to pay. I don't know why the rulings that you get, they are so discouraging that, you don't even think of approaching, them, that how much tax I should pay. So in GST, the only way you can predetermine is go for an advanced ruling. Or the other way is make a representation to the all powerful GST council,
Yep.
who is running all the show around GST. So I think
No,
that's
but
the other way.
then Sarab said that people are not no longer seeing the kind of 20 pages well articulated legal documentation, but they refer the WhatsApp and all those discussions. So you cannot avoid those. So tax authority have means to unearth that also. So Pushpendra, just one question from your side, and if you can be quick. The globe rules have complex safe harbors and substance-based carve-outs. In your experience, is the current strategy for Indian groups to aim for qualification under this, or to accept a top-up tax and focus on operational simplicity? What is the real life dilemma in from this view?
So you are saying outbound for Indian headquartered was moving out and more from pillar two standpoint. I think a lot Chandan has mentioned about it, but I will just accentuate or emphasize on the fact this pillar one, pillar two was much awaited. Good that OECD has brought in, because if we don't have these kind of things, we will not be able to move. We will have only unilateral tax measures being adopted by different countries, and we'll have push and pull. Good that there is a some system, and good that for the first time OECD has accepted India's approach of accrual-based taxation. They were always harping about residence-based taxation. All developed countries, for the first time, OECD through pillar one, pillar two, they accepted, rather pillar one specifically, that income has to be taxed based on accrual, but income and efforts and return. Coming to the point which you mentioned, India is already, having more than 15% tax, except those cases where companies are availing SEZ benefit or some other, left out incentivization, because government of India is clear. We need to align with the global standard. We need not to give more and more tax incentive. We need to give other than tax incentives to make ease of doing business, etc. So nobody is bothered about going below 15. People are bothered about, the clarity, the certainty about the law. That is more than warranted for good taxpayers, good companies who are listed and who want to make their presence felt globally. So they are really concerned about right compliance, follow the law, but they need certainty.
Thank you. One last question from, I will take 1 minute extra. So to Alok, one of the very famous court case in India is the Vodafone case. But I have a bit different question here. For a company like, say, about 50 ongoing litigations, how do you objectively decide what to handle with in a house war room versus a specialist counsel? What factor, cost, control, strategic, secrecy, or most decisive in your experience?
Bandwidth, I think, most important factor.
Yeah.
So everyone in industry who is working, we are working like most of the teams are working on a very lean tax team. And so the priorities are compliance, managing or supporting the business folks, and of course, responding to the notices which keep on coming. So it all depends on how much time do we have, what is the gravity of the notice. If it's too technical, too in-depth, which requires some kind of expertise, then I think we or someone should engage an expert consultant, expert counsel onto it. If it's something which is recurring in nature, which and the tax team is having some bandwidth as well, so we can ourselves go and represent before the tax authorities.
Okay. Thank
Chandan
you.
might differ on this view.
Yeah. Thank you. One last question to Rajesh. These days, high-profile tax disputes is no longer just a legal issue. It's a media and investor relationship issue. Beyond winning in a court, what should be the tax function's role in managing the narrative? What is your take amid the recent developments where tax become a talk of the town?
Sure. I'll put it in simple words. Whenever you win any particular matter, don't be that euphoric. Just go with the flow. And, more importantly, what is really required, and just, speaking to external world, you just speak internal world also. For example, your own employees. In case, you believe that particular litigation, which is high in volume and complex one, can bother the employees in-house, because employees most of the time have a lot of questions. What about the company's future? So you need to sit with them, just, tell them the things will be all right, and whatever will be the outcome, it should be acceptable to each one of us. Sometimes the purposeful non-action can be a good policy, because you just sit quiet, let it pass on. And of course, we have huge amount of laws, legacy in this country, and beautiful courts sitting across the country. So they are there to interpret the law, and whatever decisions are, live with it, speak to your partners, management, employees, as I said. And to the external world, you may choose not to speak, because purposeful non-action can be a good policy and strategy.
Thank you. I practically experienced this, in my previous IPO. This is my third IPO. In previous IPO as a CFO, I was, about to file my DRHP, and the Director of Revenue Intelligence came to clarify some custom related matters which they are not entitled to. That is not their domain, but they have came and everybody was talking कि DRHP file होगा कि नहीं होगा. Now all these uncertainty actually creates a problem for the employee's mind. At a first, it goes media and it may not go to the media, but generally it creates a lot of problem. So I am done with my questions, sir. If you have any question to any of the panelists, please speak.
That's true. That's true. So, Mhm.
So question, I'm sorry, but you have a question?
You refer so-and-so circular, you refer so-and-so circular, you refer. Go back. What is the effect of that? What subject this circular is, notification is, no plan.
Okay.
So some subject is there, what is impact of the top and the bottom. Like DGF to Minister of Commerce, they are doing that. Any notification of the DGF to Minister of Commerce, what is the subject, what will be the impact? That should be.
Okay. There's more of a pointer that you had.
It's a very good input.
Clarity should be there. Refer so-and-so, refer so-and-so.
I agree for the GST notifications. You really have to open, once one notification and you have to open 10 another to establish the connect, with the latest notification. So
I think
I
this keeps us
definitely agree with
employed.
you.
This keeps us employed. We should appreciate this one.
Badhiya. Done. Thank you so much. Thank you, sir, for moderating that. Thank you to group pictures of all of you, please. Applause for them. Thank you. Thank you so much. Thank you. Quickly moving ahead, the next one, it's again a tax power panel on tax transformation, India's roadmap to intelligent automation. And for this one, please join me in welcoming our panelist, Amandeep Singh, Senior Vice President, Finance and Head of Tax and Billing, COE, SBI Cards and Payment Services Limited. Joining him is Anshu Panami, Director, Global Tax Squad. Joining them is CA Rahul Jain, Head of Tax, Lenscard.com. Also joining them is Amardeep Kanodia, Group DGM and Head, Direct Tax, Chackwar and Company Private Limited. Also joining them is Puneet Mishra, Tax Director, Intel Technology India Private Limited. And this one, fully moderated by Dr. Pankaj Dikshit, Executive Director on Board and Chief AI and Digital Officer, Signet.one. Just please welcome them with your applause, everybody.
Good morning and good afternoon, ladies and gentlemen. And thank you very much for being here. It's so nice to see a crowd of tax leaders. And we have, the stalwarts of legacy companies, SBI, Intel, Jaguar. And we have new powerhouses also like Lenskart and Pioneer on the panel here. And what I'm going to basically talk about is how these leaders are using technology, to make tax compliance easier as they go by in their day-to-day lives. So thank you very much for being here, the panelists. And let's start, with the opening that how do you, see a modern tax stack, tax architecture as far as technology is concerned? You already have, you see, GST and income tax departments automated. You have to talk to them through APIs, get maybe daily notices or even file your returns. And then you used to have RPA, but now you have AI and you have Gen AI. You have e-invoicing. You have document extension notices which come, virtually they come in bucket loads by the day. So how are you using technology, and how do you look at your technology stack from a day-to-day basis? We can start with Amaldeep. Yeah.
If you say technology, so nowadays, without technology, it's very difficult to answer even a single notice from the tax office. The set of data, the food which the tax department is having, it's gone are the days when such data could be answered on an Excel or without a robust technology in place. And in fact, we should be very to my suggestion, we should be working on a proactive basis, adopting technology so that before even filing a return, we are aware of what are the probable questions which can come from a tax office, and we have a ready answer for that. So we should adopt technology to that level, to my understanding. And yes, we are adopting it on a day-on-day basis. We are working with the CIO, with the functional team, so that we have things in place.
Okay. Thank you. Puneet, would you like to give some examples also in what your technology stack includes? Yeah.
Yeah, so what I think is one of the things when we talk of technology in tax, and if we compare the regulators, industry and consultants, what I feel is one step behind the government in this case. They have been the fast adopters of technology, whether it's the GST department you see, or whether it's the income tax, they have the big data, they have done their homework. And somewhere we as an industry need to gear up now and make technology as a key pillar for any tax function. So there's a lot of focus now on using AI tools and others. But what I would say is what I have seen across digital companies, because my experience has been working with digital companies mostly, the journey has already started long back with digital companies. So I used to work with an organization, an e-commerce organization, where they used to have a team called a taskless tax team, where the job was how do you automate all the process. And this was only software developers who were leading a tax team. For the first time I saw that. And now with AI coming in, what I increasingly see is how do you use AI tools? Like, so you said Gen AI is one thing, but increasingly now agentic AI is the other piece which is getting so much relevance right now. So I think it's very critical how we use these AI tools and how we educate our teams to make tax as a main pillar for technology, sorry, as a main pillar for tax.
That's great. So software developers working in the tech function. That's nice. Yeah, over to you, Rahul. You just come with an IPO, and I'm sure you must be under greatest scrutiny, and you have to be more compliant than the compliant.
Yeah, absolutely.
Yeah.
So I agree with Puneet on that one sentence that we are still way behind in terms of technology adaptation as compared to the tax authorities. I think as a tax team, we are still focusing more on the Excel sheets, more on the manual work in terms of the recos. But when it compares to the tax authorities queries, we see that they have both the data, the GST and as well as the income tax, they both are talking to each other and come up with their queries. So I think what tax architecture or tax technology architecture, for me, it's more practical than just a fancy wish list, that we should pick up the source data from the ERP. The automation happens directly at the source at the ERP level. Then the data moves from the ERP data to the GST portal, or I would say the income tax portal for filing purposes, for the TDS and the GST. And then eventually the reports comes out, which just not talks about the compliance filing. It talks about the issues. It gives you the report that where is my outflow, why my outflow is there. In 1 month, I'm comparing the outflow is nil, or it's a lesser as compared to the outflow is in the next month. So it gives an idea more about the, not just about the tax compliance, it gives an idea how the business is evolving. So I'll give you one example. So what we have done the GST automation at our level. And as of now, for the last 4 months, I will tell you that my focus has been shifted from compliance to see how the business is evolving. Why in one state the business is there, why the business is not there in the other state. And then we think more about the capex, that there is a ITC blockage there in the capex in one state because the store is opening. So we get to know more about the business and we talk to the business team in that fashion. So that's how, as a wish list, which is also practical, we have now moved into that. And I see that as a tax team now, we are speaking more about the business than just the tax compliance. So this is my wish list. Yeah.
Yeah. So technology gives you visibility also into what's happening in the other zones and regions. Thank you. Anshu, what about your tech stack and technology? How does that look like?
So yeah, I agree with everybody here. I think India is way ahead, in terms of introducing digitization when it comes to e-invoicing, because I work with a lot of countries, and believe me that India is way ahead when it comes to starting e-invoicing or reconciliations like GSTR 2A, 2B, because there are other countries which are still introducing e-invoicing, which are still thinking of launching e-invoicing. When it comes to internal in-house, it's not just when you're dealing with voluminous transactions, but when you're dealing with, say, for example, if I'm dealing with 70 plus countries, it's about how you align your compliances. It's very important because every week or say for every month, I have, say, for example, 90 plus compliances. Now to kind of align them, organize them, and to make sure that you don't miss out on any of the compliances, because as a tax function, we deal with statutory filings. We cannot afford to miss even a single filing. So automation and technology definitely helps here, because that helps you to keep a track. That helps you to kind of, keep an eye on what is coming next, because you work with finance teams. You need to have data, if you're not fully automated in-house, you need to work internally with the finance teams, ask for data timely, review data, and make sure it goes to the vendors on time, and you file it on time. So I definitely agree that technology in-house has to really step up. We as industry are still, as Rahul said, we are still on Excel sheets, more comfortable on Excel sheets. We need to change the mindset, need to progress towards automation.
Good to hear, at least for a change, that the government is ahead in technology. Amandeep, your thoughts on your tech stack?
So again, what I would say is that the reforms that government has brought in has forced the industry to step up and spend on the digital initiatives on the tax side also. So what we need currently is a strong data-based ecosystem which leverages automation, which has a real-time data exchange, so that uh, uniform compliance can be done across direct taxes and indirect taxes. Gone are the days when direct taxes don't speak to indirect taxes. Now, your tax audit report, clause 34, requires you to reconcile TDS. Clause 44 requires you to reconcile your GST expenses, whether you purchase from registered dealers, non-registered dealers. So what we have currently done in the organization is that we have put bots in place to do various type of checking before on a day-to-day basis. Like before the payment run, the bot picks up the invoices which are ready to payment. They check it with the 2A on the GST portal. And if it is not reported on the portal, then the payment gets stopped then and there only, and the email gets shooted to the vendor. That's a level of automation we have done internally. Also, being a financial company, we keep on receiving various notices from income tax department under 133(6) asking for cardholder data and everything. So we also have a bot in place, which suppose I receive 50 notices in a day, we'll place all of them at a place at the end of the day. The bot will pick up, will read it, will fetch the data from our systems, will create a reply and keep it at the same place. And next day when my team comes in, they will have a ready reply for 50 notices. So this is the type of technology that all need to put in place so that repetitive work can be taken care of. The compliances happen on a day-to-day basis on a regular course. And what tax team can do is a value addition and act as a business facilitator. So that's what we plan to do. We are doing currently as of now.
Amazing. If you are already using bots to, read your notices and even draft a reply, that's awesome. And that's great. So Amandeep, staying with you then, now when you're doing such, innovations, which is always state of art already, if you're using Gen AI, how do you decide that if there is something to be done as far as technology is concerned, what you will build within SBI and what you will get done by an outside expert or a third party company or a tech service, service provider for that matter? How do you make this distinction? Because there are so many technicalities which, as a tax head, you may not be that domain specialist, but somebody else might be helping you. So what makes you take the decision in-house or outside?
So I think the decision rests on three grounds basically. First is availability of in-house expertise, which is whether you have an in-house expertise to create that thing internally or not. Secondly, which is the biggest one, is the cost associated with doing it internally, because you would see that our internal project may take 3 to 6 months to develop a solution, which may become at times very cost burdensome. And third is how frequently the changes are happening in the ecosystem, how frequently you would be required to change that system or to change it in line with the statutory requirements. So we are a NBFC, and the data privacy is the biggest concern for us. So whatever touches my core system where the data of the cardholder is lying, my first priority will be to develop it in-house because I will have more control on the data part and the leakages will be less. Even if it is a bit expensive, still I would want it to happen internally because it is touching my core system and putting a bolt on that system will be risky for me. But if it is on my input side, like there's vendor data, which I need to check whether this invoice is a valid invoice or not, the QR has to be read, whether the 2A 2B matching has to be done. And I know that every 6 months the law will change, the requirements will change. My preference will be to have a bolt-on from a SaaS service provider who is expert in this. He'll be cost efficient also because he will be selling the same software to hundreds of clients. So I'll not incur much. He will change it along with the changes in the statutory requirements very fast. And I may miss something if I do it internally, but because he is doing for 50 clients, 100 clients, he will do it very fast and it will be cost efficient also. So we have both the models. Wherever there's data, like I mentioned, replying to income tax notices, we have developed an in-house bot. But wherever this is output invoices, inward invoices are concerned, we have taken solutions from outside service providers.
Yeah, so that's a good decision point, right? If it's concerning privacy or data of your clients, which is kept to be secured, you take that in-house call. And if it's a third-party kind of invoice handling or return handling, you give that to an outsourced party. And also because you want changes to be done as part of your outsourcing contract to that third party service provider. That's a good decision point. How about you, Anshu? How would you, take that call? I have so many ERPs. How do I integrate with GST? How do I integrate with the income tax? How do you take that call in-house or?
Yeah, so I agree where you have a in-house development team, which takes care of or which is capable and fully equipped of creating a platform or creating software or a tool. It all depends on the business need. If my business need, if I have a very specific business need, I would definitely like to build, considering that I have the capability to build. But whereas if I have some repetitive task and some filings which are to be taken care of, there are tools in the market which have been created by experts, researched. So I would definitely like to take advantage of those tools which are available in the market. So for example, GST filings are there, the income tax filings are there, the TDS reconciliations are there. It's always better to go for the tools available in the market. But for example, I have some very internal approval flows to be taken care of. There's MIS which is happening. There's approver checker tracks which needs to be there's some reporting which needs to be happening every month, tax provisioning to be happening every quarter. So I would definitely want, considering again the capability in house, to have a tool, to have a platform where I can set certain features which takes care of these regular reportings, regular provisionings. So definitely would like to build theirs. And as Amandeep said, if there's something which is dependent on law, which keeps changing, like for example, GST is an ever changing, it's always definitely better to buy because there are people in the market who are actually working on those regular updates. One cannot keep track of that in-house. It's not possible for a small tax team to take care of that.
Yeah, great. So your decision point is probably internal approval flows and checkpoints and controls that you'd like to be in fully ahead of. You keep that as a decision maker for keeping it in-house.
Yes.
Staying with you, Anshu. So we had the last panel and some members mentioned about being proactive and using automation, to avoid probably disputes from the authorities and have your internal preemptive audits to be done. So how do you think can intelligent automation, or what are you doing to have a similar kind of internal audit or systems and automation and technology that can help you be prepared proactively for audit flags?
Yes, I agree with that. It's always better to be well prepared before. Disputes usually arise. I'll just talk about the basics because there are mismatches in the data. You're just submitting some general information. There might be changes in the positions year on year. So these are the factors, very basic factors, which call for, inquiries, investigations, or notices. Now, based on one's experience, one can always learn and kind of, develop on those points which have caused disputes in the past. Being prepared means that, okay, I know that certain data is required. We are always dependent as a tax team, we are always dependent on the finance teams for data. When they work on audits, when they work on workings, there are certain stands, entries passed during audit which have workings. There are detailed workings prepared for the related party transactions during audits, which goes into the financials. So all these, we need to educate or probably, seek cooperation from the teams to have these data ready, create a data repository so that as tax, we can just go back to that data repository and take out information that we need. So how does automation or how does technology helps reduce disputes? It's only just by being prepared well in time. So I'm not saying the notices will disappear. The notices will reduce. You will have a better success rate when you are going towards CIT appeals or DRP. You will have lesser notices coming in because when you the key thing is to be on time or before time, the tax authorities. So once you know that the notice is going to be there, you have to be fully prepared with the data that is being asked. Once you know and once you're ready with the data, the tax authorities will be somewhere, convinced that, okay, there are no gaps in the information. There is no generic information being submitted. They are being answered on time. And if you answer these questions on time, I think the chances of further litigation reduces.
Yeah, thank you, Anshu. So, yeah, Rahul.
So I think how our tech can help in reducing the litigations, maybe because we are also working on that pattern, that especially the GST audits, the inquiries, the normal audits and the full-fledged GST audits. So what we have now started doing and using the tech, that we have picked out last 3 years, 3 to 4 years, the GST notices. And the robot or the bot is helping the finalizing those questions. They may be repetitive as well. So it gives us the 10 or 10, 20 questions, that these are the common questions that comes in. And now what we are doing, that we are using those questions in doing the health check of this current year, so that you are ready in terms of that these are the ready-made flag issues that happens every time GST audit. And as an internal health check you are done, you know that you have the answers. There is no 2B, 3B recourse. So that's how you preempt the questions, because there are common questions that's coming in for last 3 years. And then you address and keep it in your report. As and when the query comes in, you can just submit it.
Great. So again, AI to the rescue, right? So Rahul, staying with you, how do you ensure that use of technology becomes a core function and not just a side project? Do you have that kind of impetus in your organization?
Yes. So I think what we consider as a tax team, and we have decided collectively as a tax team that that it's not just the manual work. We really have to think beyond how to automate that manual work into the tech, right? And we have considered as a KPIs as well, right? I'll give you a very simple example that in my GST team, we were doing the manual recourse in terms of the HSN, in terms of the vendor recourse, in terms of whether the GST is active or not. So there are some checks which we're doing manually. Now we decided that let's do away with this manual work. Let's bring the automation. It was one of the KPI of the team member that in the next 3 months, you have to automate this manual work. And the output was that if you're filing on the 10th, the GST R1, it has to be -2. You need to file on 8th, right? And for the last 3 months, we have done the automation along with the help of our internal tech team. We explain explain our process that we have to do this manual, do away with this manual project. And eventually we have achieved. There are lots of up and down, lots of to and fro. And we achieved that thing. Now the team is quite moved on from in terms of filing. Now they are analyzing the data. So on the 8th, we are doing the filing, and on 9th or 10th, I have that analysis with me. Then in which states we are paying, we have the revenue more, and then we compare it with the last month. And then we give it a report to the CFO that that's how the GST reports, and he compares it with the MIS. So that's how so it becomes the capability, and we are considering the tech as a team member, which enables us to work more.
Great. So would the tax head also become the CIO in the future? Yeah.
We're just improvising.
Yeah. Puneet, thoughts on the same thing? Technology being a core project rather than a side project?
Yeah, I think, yeah. So it's important to have a mindset shift, I would say. And this is where I think when you speak to large multinationals, I think that's where. So I slightly differ with Rahul here, I think, in terms of automation versus using AI. So automation is, I think, something which is generally which we will be doing in the normal course. But tax function now needs to take a step up. And that's where, how do you put digitization or AI as a key member, and everything revolves around that. Now, right now we have tax functions, which is direct tax, indirect tax, transfer pricing, and so on. But somewhere we as tax professionals need to understand that technology is something which will drive these processes. So it's important, like in terms of like Anshu said that Excel is something which is not required right now. And she's very right in that sense, because now we have moved from that mindset to see how we can preempt things. And when Rahul says that one of the bots is able to find out the pattern of these notices, that in terms of GST notices, how this can be put in a more process-based way. So somewhere what I feel is how we are able to define that technology in terms of whether in direct tax it is able to file the returns without any manual intervention, when in indirect tax is able to read GST notices and come up with a reply. So there are large organizations where they get 50 to 100 notices in a day. And somewhere when we talk of agentic AI or other forms of AI, those things would help. And similarly, in a transfer pricing methodology, I think it eliminates the role of the consultants in terms of doing a benchmarking, where the tool itself does a lot of those functions. So technology has to be core as a process. And somewhere when we give tax controversy or tax litigation the same weightage because of the dimensions, I think technology is now gaining that same level of relevance in an organization, and it sits on the same table, I would say, as the tax controversy would.
That's great. I think technology probably understands tax. And going to you, Amardeep, since we are talking and the subject is, will the future tax head be a CIO? So how do you look at cross-functional, operating model of the CFOs, CIOs, and the finance transformation, and how the compliance actually works to fund and sustain the automation? So if you can throw a few thoughts on this.
So, frankly speaking, nowadays, cost for transformation, its results are not that big a concern for the organization. Organizations are trying to remain compliant. And whenever we talk of compliance, generally we don't face the heat of budgets and other things, which previously used to be an issue. So yes, matlab the promoters are changing, the CEOs or the MDs, they are understanding what compliance is and what is the cost of non-compliance. And as far as the CFO and the CIO
and the cross-functional team, involvement of the cross-functional team is concerned, yes, so CIO is someone whom we go with our wish list. Yeah, this is the change. This is the change which we want to incorporate, or this is the kind of a thing which we want from you, so that we avoid doing repetitive things on an Excel and just spending time, wasting time, in fact, and not working on the core activities. Frankly, how it happens in my present organization is we go with a wish list to the CIO. Ki, boss, we need this development ahead, either to remain compliant or to proactively work towards a better compliant, or to proactively work towards the data to remain to answer in the subsequent audits or something like that. And then frankly, we sit together, leadership sits together, and then we decide what all wish list can be fulfilled with an in-house team by the CIO, and for what we really need to go outside to some service provider which are readily either available in the market, or they need to customize something for us. So this is how we take up everything, taking all the functions, and especially the CIO under confidence to remain compliant and to be ready to answer anything which comes from a tax office.
Okay.
Because practically today, if you see a notice comes on Friday and you have to answer it by Tuesday or a Wednesday, and if you go for an adjournment, you hardly get an adjournment for a week's time. And answering such big notices with all hefty data is very difficult in the upcoming times if we really work on an Excel or something like that, and we don't remain proactive.
Okay, so in such a case, when you go to the CIO and when the product becomes ready and after a period of time, so who justifies the ROI or the investment in that requirement? Does that become a tax head's responsibility or the CIO's responsibility? Because now there's a term that's now evolving, is the ROAI, return on AI, right? So how would you, I mean, I leave that open to everybody, starting with you, Amaldeep.
So, frankly speaking, I've been into the tax function for almost 2 decades. So I've seen a transformation. 7 or 8 years back, if I used to go to the with a cost involvement into a project, yes, there was evaluation and other things, but now mindsets have changed. If it is compliance, if it is if it is if it is if it is an investment to answer some tax notices, or it is a tax requirement, then cost is not that big a factor which is being considered nowadays.
Okay. Tax,
So,
tax
so-
means ki yes, money will be there.
yes, it's because tax today is hitting the bottom line, in fact.
Yes.
Yeah, I think what he said is very right, because tax hits the bottom line. And that's the key discussion point whenever you go with these tools, is that somewhere this would help in terms of judging what the risk is on the company. And again, I have seen these conversations getting easier based on the risk levels, where the finance leaders and the CIOs have been able to appreciate that investment in a tool is actually lessening our risk rather than increasing the risk in terms of that.
Okay, so funding is probably easier to come by. What about upskilling your teams? Do you upskill your teams for AI or seek budgets for those also, Rahul?
Yes, absolutely. So it's not about learning the coding. As a tax team, you don't need to require or to
Coding
learn.
is done now.
Yes,
But no-
coding or to see create your new bot for yourself. It's not required. It's about the understand the need or the requirement of the AI. Whether, because there are lots of AI tools now. Everybody's using this word AI, right? It's about when I see the upscaling of the team, you need to understand what your problem areas are. You need to understand what are the tools available in-house and out-house, and what is the ROI, whether the output is actually giving you that result which you are seeking for. That is the upscaling. That is the thing that You're educating yourself that you identify a problem and then seeking a solution, whether you can build it in-house or an out-house. That is the upscaling for me. And that is one of the KPI for the team as well, that if you are doing anything manually, whether it is doing a research. So for, I'll tell you one thing, that like Taxman and other products are coming their own AI research as well on the research papers, that they come up with their own opinions and as well. So when we are now reviewing those products as well, that does it really help us in terms of reviewing the or doing their own in-house research? So we are, it's not like adopting every tool. It's like do your own research first.
Okay, Anshu? Once a justified upskilling?
Yeah,
ROAI?
I think, yeah, upskilling, I mean, in agreement with Rahul, but I think upskilling is also more about, um, coming from a traditional way of working and then having a mindset that, yes, I want to adopt automation. I want to adopt tools that work to my advantage. And therefore, it's not just me. It has to be the team which shares a similar mindset. It has to be the whole management which shares a similar mindset. And therefore, um, you know, everybody goes in the same, thinks and goes and moves in the same direction. Tax cannot move all by itself if the finance and if the management is not supporting. So getting a budget, I think, may not be very simple because we still have to justify how is this tool going to help us, how many number of hours will be reduced, how it's going to actually, benefit us. Because yes, of course, compliance is my area. Compliance is every tax head area to make sure that every compliance is on time. But then what goes behind it, only we know.
Okay. So it's not a given, but it has to be justified, right? Amandeep?
So again, already a lot of has been said about this. What I personally feel is first and foremost is the mindset of the team, because till few years back, whenever you ask someone about any IT thing, this is for the IT team, not for a tax team. Now that mindset is changing slowly, and the technology, how it's evolving. A year back, if you would ask somebody what is AI, he would say Chat GPT. But now, in last 1 year, from AI to generative AI to gigantic AI, everything has now the Chat GPT is there, Perplexity is there, Gemini is there. So many tools have come up. So if you do not train your team to be on the top of the technology, you will certainly lose. So first and foremost is the mindset that yes, technology and tax has to go hand in hand. Secondly, once that mindset comes in, the second part is the training part. Because I still remember when I started using ChatGPT, because my daughters were using it for last 3 months and I used to feel ignorant. Uh, I was very happy with the first draft of the answer that I will get from the ChatGPT. But once I attended trainings, I understood that the first draft is only 40% correct. You need to ask smart questions, then only you will get what you really want. So the training aspect is very important when this new animal of AI needs to be trained and to be incorporated in the tax scene. And the third and the foremost is the fear factor. What I saw in my team when we were putting bot is that we are doing this work. If tomorrow bot is doing this work, what will I do? My job will go. That fear is also there between, and that's why they don't want to adopt technology. So you need to put them into a different job profile, so that whatever repetitive work was currently being done or historically being done by them, uh, they are giving it to the bot and they are doing a value addition on top of it, or they are doing some different work. So what's in it for me is a very important question to be answered for the tax team also, that if this bot does work for me, or that I used to do, what will I do? So if you can give them a better work, alternative work in the tax team or in the finance team, they will be happy to adopt the technology as well.
Yeah. So one very important thing you brought out, that the first output of an AI engine is not always the best. And always remember, because for tax, numbers are the most important. The accuracy and the figures which you ultimately report to the departments, they have to be verified again. And you have to assure yourself as tax heads, yes, that that's the right number going. And, 10 years back, 2015, when I joined GSTN, I never knew that we'll be creating a system that will now start spewing out notices. And at the other end, I will meet Amandeep's bot, which will also make replies. So one last quick question, maybe in 10, 15 seconds. How far do you think is the day when there'll be an AI engine throwing notices and an AI engine replying to the notices? So how far do you think is the day, starting with you, Amandeep? And
So it's already there. Now we should be talking about, so now even the appeals are being drafted by AI, the reply to notices are being drafted by AI.
no, I see no human in the loop. Let them talk to each other.
It can be as fast as another 1 year.
Okay, yeah, Anshu, I mean, just on the lighter side, right?
Yeah, I think looking at the speed, the way technology is moving, it can happen anytime. Again, it all depends. So definitely, even when using ChatGPT, one needs to be cautious.
Yeah,
So
sure.
you can't just completely believe what it throws.
Rahul?
I think, yes, it's there on the cards. Even the tax officers are quoting the case laws using the AI. So I think it's there on the cards, I guess.
Okay. Puneet?
It's on the cards, but I think one of the things is hallucinations. So AI, any tool, like if both the tools are AI, how do you get rid of hallucinations there? I think that's one area where we should be cautious of.
Yes, absolutely. Amaldeep? Machines talking to each other? How many months? Years?
So yes, this is gonna happen because tax department is also sending notices basis all AI results. So someday or the other, we have to be ready. Our AI responds to these notices.
Thank you very much. Thank you very much, everybody and the audience for listening to us.
Thank you. Thank you so much, sir. A picture, please, man. And thank you, Dr. Dikshit, for moderating that. Thank you, sir. Thank you. Thank you so much. Thank you. We've discussed tax at the crossroads, global reform, digital disruption, strategic relevance. Then we discussed tax transformation. In this one, roadmap to intelligent automation. And now we'll talk about tax data as the new currency, marketing or mastering the invisible asset. And to share the views on the same, please join me in welcoming to the stage Deepak Arora Group, Head of Tax for I Technologies. Joining Deepak is Vipul Mittal, Group Indirect Tax Head, DCM Shriram Limited. And this one will be chaired by Savi Khanna, Assistant Editor, BW Business World. Let's please welcome them. Thank you.
Pick for this conversation. We'll start with just a brief introduction about your experience and your organization. We'll start with you, Mr. Deepak.
Good afternoon, all. I am Deepak Arora. I am a group head of tax with Farai Technologies. Our company is a logistic software company. Our software helps in the big companies like IKEA in their delivery planning. So it's a totally service industry wherein our software helps the companies in their last mile delivery. As a company, we have India headquarter with 6 subsidiaries across globe. So, I mean, from a tax point of view, we have a lot of compliances to be done at our end.
Thank you. Mr. Vipul.
Yeah. Hi, good afternoon, everyone. I am Vipul Mittal. I'm heading the indirect tax function for DCM Shriram Limited. So our company is a diversified Indian conglomerate having multiple businesses like chemical, sugar, fertilizer, seed. So there are a host of businesses, cement, power. So it's a very diversified group, and that's where it offers diversified challenges. And it's good, great learning for me personally to handle so many businesses and work with so many businesses. Yeah. Thank you.
Thank you. Coming back to the topic for this discussion, I'd like to start with talking about data a little bit. You know, today data is no longer just a piece of information. It's how the markets are operating. It's used in how the businesses are led, how the economies are running, right? And one such example is UPI in the recent past, of course, along with all the other great inventions that we've been seeing. But beyond these collections, the real story is behind the data and tax numbers, you know, where, who is paying, where the value is being generated, how is it helping the economy, how are digital platforms being used to monitor compliance and policies. Also have been recent episodes where we've seen sensitive data being leaked. Now, we'll not, of course, we'll not name the reports, but 135 million taxpayers had to bear the cost of that. Just an opening question to both of you. The topic for this discussion is tax data as the new currency. What do you think about this? What are your views on this? We'll start with you, Mr. Vipul.
So I think as far as the indirect tax is concerned, the entire, so like sir mentioned, Mr. Principal Commissioner of Customs. So our domain is a transactional tax. The tax is on every single transaction, be it GST or be it customs. So our data has to be 100% accurate. We cannot have any such instance that the data which we are pushing to the government on a real-time basis has any kind of inconsistency. So the transactional level data, master data, everything has to be pitch perfect. Otherwise, the amount of technology the government is using today or maybe tomorrow, you will get the notices, right? There are system generated notices, DRC01C and B or maybe. There are multiple notices which are system generated, which are coming on a real time basis without any intervention from the tax officers. At many times, they're even clueless that this notice is sent from my ID or my range has sent this notice when we reach out to them. So yeah, it's a very, very important facet of the tax function now that the data should be controlled, especially the masters, your HSN master, your vendor customer master. Every master has to be sanitized and perfect so that you don't land up in unnecessary trouble. Yeah.
Thank you. Mr. Deepak, your views on this?
So let me tell you, like when I started my career, it was an oil company. So we used to say oil is a black gold. It gets changed now, data is the gold. So see, we ourselves is a data nowadays. We have our own Aadhaar number. So data is getting created with every of your transaction, and trail is getting generated in each and every of transaction. Now, let me tell you, like if we go 20 years back, the returns used to be very simple. The ITR return comes, the form used to say it's Saral form. Now the tax returns have evolved. I mean, they are asking for so many data. Similarly, see the earlier service tax return and the VAT return and the current, the GST return which we have. I mean, I was just checking for an e-invoice. There are 138 data which you can put in, out of which 30 are compulsory. Now just imagine 138. So that many type of data is getting generated just by a single e-invoice which we are preparing. So, I mean, as a company, first we should know that the data what we have only our data with us, whereas the government have the data of my customer as well as of my vendor. So they have more data by which they can get to know what my data is saying to them. So I mean, as a company or business, what we should do is we should be very much aligned, and we should have data in such a manner that our tax function is performing well under the law. We are not doing anything wrong, or I mean, you should be aware of the latest tax laws. Whereas the government, in case if you miss out anything, government is there to catch hold of you.
Adding to that, Mr. Deepak, when you talk about data ownership, how important is data lineage and ownership across functions? Now, who should own the data in organization? Is it the tax team? Is it the finance team? Is it the business team? How do they collaborate? What are your views on that?
See, now data ownership and lineage are the new two terms which have come into picture. But then ultimately, thing which we all need to understand is that tax is not cannot work in silos. Similarly, tax data also doesn't belong to tax team. So, I mean, if I have to file a return, let's say GST or 3B, there are some of the data which will come through O2C team. There are some of the data which will come from P2P team. Now, for a tax lineage, a data lineage, what we need to understand is lineage means how the data is getting transported in your system. Like my P2P team is booking the invoices in the ERP system. Now, how this data should flow so that the data comes into my GSTR 3B as my purchase register. So the now the system is like such that we cannot uh, have only tax team to be the owner of the tax data. So data ownership has to be divided, like master of like tax rates or HSN rate. The tax team can help the P2P team and O2C team, but ultimately that data attribute belongs to them. So tax as a function has evolved a lot. It is not a simple return which you used to file. Now tax team is depending on so many data which comes through many teams. So as a company, all of us should think that uh, we have to work in collaboration. Then only we can prepare a data in such a manner which will help us not only in filing the return, but also since because the tax team is the only team which is subject to scrutiny by the tax department. So this is what I used to tell to my all CFOs, so that the other teams have to just face the statutory audit and internal audit, but we have a outside stakeholder as well. So if we have this data lineage and ownership, then only we can be in a position to defend ourselves. Thank you.
Mr. Vipul, do you have something to add to that?
Yeah, definitely. So I think I would break this into two parts. Okay. One is putting controls, right? That is the most important aspect. When you're maintaining any kind of master or transactional data, tax team has to be front ending that thing, that what controls are required from a tax perspective, work with the business team, work with the accounts team, act as a business enabler, understand their requirements, that what is practically possible, what is not practically possible, and how that data will flow. Once that SOP is defined, that the data is defined, that how the data has to be maintained at transactional level and the master level, then maintaining that data is generally the responsibility of accounts team and the business teams who are day to day doing those transactions, because tax team is not creating those transactions. They're merely reporting those transactions. So at least from our company standpoint, we have that clarity that wherever there's a change happening in the master data from a regulatory perspective, tax team has to front end that thing and make sure those changes and controls are put in the system. And from there, the business team and the accounts team takes it.
Okay. Well, do you think data integrity is more of a technology problem? Is it a technology challenge or more of a process and people challenge?
I think it's both. So one, we have to see we are still human, right? There will be some human errors which people will make. And that kind of error, like we also see, since it's a transactional tax, again, I'm mentioning it, that on a small transaction, if I commit a mistake, even if the value is low, the amount of time I spend to debug that and take a corrective action is much, much higher, because we have so many system controls in place, right? So it can be a human problem, but that is still controllable. My major problem is that if the controls we have put are lacking or not proper, that may result into a disastrous situation at a later point in time, wherein you'll realize that this is something which was supposed to be monitored earlier and which was not monitored. Like in GST, if you're facing an inquiry from a central agency like DGGI or DRI, and if you have a pan India registration, that inquiry might generally spend for over 5 years in 25, 30 odd jurisdictions. So just combine that 30 odd into 5 is 150 locations, 150 tax periods, 150 years data you're giving to the government, and they want that data at a click of a button. Means they'll just give you 5 days, 7 days. You know how these agencies work. So all these controls should be in place beforehand so that you get the data as quickly as possible, which gives comfort to the authorities that you have good amount of controls in place. In many of the inquiries, I've seen that when you are quickly able to respond with clear data, they understand that yes, the company has controls in place. There might be few small misses, but there will not be an evasion kind of case. So that gives a lot of confidence and trust which you build with the tax authorities, which helps you get over the notices very, very easily. Yeah.
Right. Mr. Deepak, you want to add something to that? What are some of the challenges that you are seeing in maintaining data integrity?
Oh, I concur the view of the other speaker. See, tax department is meeting with the client, I mean, their customers on and off. We are not meeting the tax department on and off. So they know by the data which we provide whether they can trust the data or not. So as a business, we should be having such a kind of framework in our organization that we can provide the data in the given time framework. In case if we ask again and again the adjournment, the trust which you create, that gets shuffled. So I mean, as we say, well begun is half done. So your you win the battle if you provide the data in a timely manner and in a trustable manner. So your data speaks for itself.
Right. So how can you collaborate with CIOs or let's say compliance heads to ensure this kind of security and also that there are no lapses in this?
So see, now tax team or tax head have to is not only I mean that we need to read the law and interpret the law or file the return. We are a collaborator with CIOs to tell them and to make the changes in the system and architecture so that the team which is entering the data, like I'll say the two teams which creates the tax data is AP team and the sales team. So the invoices which we are getting from our customers and the invoices which we are raising, that's all. That starts with the tax data which gets prepared. Now, to the CIOs, the kind of information and the changes in the architecture should be such that the data in each and every transaction gets auto-filled, and all the attributes which are necessaries should be filled at the time of first entry itself. See, I'll give an example. Recently, my procurement team books an invoice. There was an party from which we were purchasing some services. Just in between the party was an LLP, shift gets converted into a private limited company. That change we get to know at the time of filing of the TDS return, which comes after a quarter. Now, since the P2P team doesn't get to know that the person have shifted its from LLP to a company, they book the invoice, they book the invoice as well and the charge the GST rate. Whereas we get to know after a month. But then in case if we would have brought some changes that the team gets to know this change at the time of filing, booking the invoice itself. So these changes we need to, I mean, as a tax team, all the changes, because we need to read the law, we need to know what are the changes we need to brought in. And for indirect tax teams, I mean, this is the role which you have to do every bi-month or quarter. Every GST council meeting, you should be knowing what are the changes they have brought in.
Speaking about artificial intelligence, in the last panel, speakers was speaking about this, and that AI is not just Chat GPT anymore. It's much more than that. We see predictive modeling. We see different kind of models that are coming up. So, Mr. Vipul, how is AI and predictive modeling helping, and is being applied meaningfully in the Indian tax functions? And where do you see the genuine potential here?
So personally, I'm not very highly upbeat about AI. And let me sound negative for this thing. And here are the reasons. I have a digital first approach that's given, and any tax leader should have that digital first approach. But one we should step back and see that what is the requirement, whether I need AI for that, or whether I need RPA for that, or whether it can be done through any other software where I can predict 100% accuracy. Because from a tax function, my biggest concern is 100% accuracy. I cannot go below 100% in any case. Okay. With AI, at least I am unsure of the outcomes, like what we are using AI for. I'm having AI agent for HSN classification. My tax policies can be read through AI. And then we are investing heavily on agentic AI. Myself, I am creating multiple AIs, agents for myself, for my team, and my teams are creating for businesses. So one need to see that which AI agent you want to publish to a larger audience, means which is a low risk kind of AI agent, which is a good to know. Like if you're using AI for creating trainings, right? You want to create educational videos for TDS, you want to create educational videos for GST, you can use, there are multiple software, Heygen, there are multiple softwares which can be used so that your time spent on regular updates goes down, right? We do regular updates as a tax professional for the business team. So whenever somebody comes on board, they just watch that video, which is customized to your particular business, then that helps reducing your time. So you need to see that which particular thing you want to automate and use AI for that. And if at all there are other powerful tools which are available, then we better use those kind of tools. Like predictive modeling, it's very good to hear that. But whenever a number work comes, I have at least seen AI hallucinating a lot and not giving correct output. We have tried to consolidate multiple data sets through AI. It has not worked, at least for us. You need to have properly written Python code behind AI so that it works and gives you 100% arithmetical correct output, right? So one needs to see that which AI tool or which other automation tool will serve your requirement. So zero in on your requirement, find out what outcome you want, and then hunt for a tool whether you actually need an AI for that or it can be done through any other software. There are good amount of tools available for generative AIs which can help you draft replies, read large judgments, and summarize those judgments, summarize large contracts, look at your number of so like we have multiple use cases, like there are large amount of contracts sitting in a database, no human can read it. So we have an AI agent sitting on top of those contracts, and based on the query mode, users can get the information out that in this agreement, what is this terms were agreed, what were the pricing term, what were the tax terms. So find out your use cases, and there are ample of other tools apart from AI which are available in the market which can really means automate your function. But without technology, you cannot survive in tax domain at all. That's one bottom line which is given.
Okay, thank you. Mr. Arora, would you like to add something to that? Where do you see the potential, and also what are some risks that come along?
See, I beg to differ with the Mittal, but frankly, it depends on the size of the company. Now, in case if for in our case, I have single GST number, so we are not using AI that much, frankly. Some of the AIs which we are using is of the third-party tools which we are using. We are not generating for ourselves. But in my previous organization, I had 28 registration. When I left, we were not using AI because it was 3 years, 4 years back. Now, with the kind of AI which has come, my previous organization is using AI for this HSN classification, when the vendor is getting onboarded. So it depends on the size of the company. It depends on what kind of business you are into. Like for a service company, we have a single GST rate. But in case of a company which have 200, 500 items in which they are dealing, they need to get updated. So my view is, see, ultimately, you need to understand the department is also using AI. The kind of notices which you see, you'll get to know this is not prepared by a human, it is a system generated notices. So, I mean, if you're the ultimately from whom I have to take that buyout, that whatever I have done is the right or not, we have to get it from the government. So in case if I have so many registration, I have lot many notices to be responded at the right time, I need to use AI.
Quickly, Mr. Arora, does high quality data actually reduce the risk of disputes? I'd like to know both of your views on this.
Come again?
Does high quality data actually reduce the risk of disputes?
Yes, yes, yes. See, if you have a high quality data, first, to get most of the organization does not have the high quality data initially. You have to invest lot many months and years to come to such a position that your system generates that high quality data. Now, what is the benefit of having that high quality data is that you don't spend your time in replying to the notices. See, ultimately, what we have seen in the past is, uh, I'll tell you, I have joined a company in 2022. I have received a notice of 27, 18, 19. Now the data was in a mess. I don't have the data also. I don't have the Excel of GSTR 1 and 3B. I have only PDF. So how can I respond? So these kind of a situation which you face when you join a new company. So bringing that culture into that organization itself is a very tedious task. So you have to bring that change to the organization. But once you get that change and your data becomes into a good data, that will be an asset to you. Ultimately, you need to understand your team is not going to be there for with you for long, whether it's tax head or assistant manager or manager tax. So you should maintain your data in such a manner that your successor should be in a position that he or she should understand what has happened at that point of time.
Right, Mr. Vipul.
So, at least in the not only in the indirect tax space, data is very critical. Like I mentioned earlier, almost 95% of the notices which people are getting are system generated and are solely based on data. So if you understand the patterns that what government is looking at, and you put that thing properly and you define that thing into your data language, that this is how the data should flow, then there are good amount of chances that you'll avoid those kind of unnecessary notices. So that's where when you're defining the data strategy, that what kind of data I need, you also involve, if you have a separate litigation team who's handling those litigation on a day-to-day basis, understand from them that what kind of notices you're getting and what are the trigger points or what are the root causes for those notices. Just try to cover those things up properly so that you're not adding unnecessary trouble, right? So yeah, that's a short point I would.
Thank you. Our time is up, but I'd like you to sum up. So we're nearing the end of 2025. What is one trend in the tax industry, in the data industry that you see upcoming in 2026, Mr. Deepak?
See, I'll tell you, there is a news channel, what we say, WI1, World is One Network. This is going to be a reality. In 2020, I remember 2020 budget. They were saying that the government comes up with this, that they will align PAN with Aadhaar. So Aadhaar is going to be your new number for individual. Similarly, your PAN and GST number is going to be your one factor by which everything will get to, the government will get to know. So changes are, the only thing which I am expecting from the government is ultimately is that from indirect tax point of view, if we can have single rate of tax, which will reduce the litigation a lot and which will make our life easier. Similarly, I am foreseeing that by the end of this government tenure, 2029, the new tax regime will be the only regime in this country. And then ultimately, we should also think of that in coming future from 25% rate of tax, the tax rate should get reduced.
Thank you, Mr. Vipul.
One trend which I see is that government is relying heavily on the data which they're getting from multiple sources, be it MCA, be it customs, and not even tax data. They're getting data from multiple other sources, right? So one area which has to be looked at is consistency. Your reporting should be consistent across all the platforms. Even if you're reporting to income tax authorities, you're on the transfer pricing front, similar thing you're reporting to the customs on the SVB side. So all those things should be consistent and there should not be any kind of deviation. So you can't work in silos. So that is one thing, data consistency in reporting is very, very critical Because if the government is using AI and they are able to link the data from multiple sources and issue notices, then it is very, very important for us that we leverage technology and understand how the government is looking at data and give the right information, right? So that is very, very critical.
Thank you. Thank you to both of you. Thank you. It was a very insightful session. Thank you so much.
Thank you.
Thank you, everyone.
Thank you. Thank you so much. Thank you, Savi, moderating it. A picture, please. Lovely. Chaliye, आगे बढ़ते हुए quickly, because a couple of you also have their flights back. We don't want to be troubling you with your schedule at least. Next, it's on global tax reforms, reclaiming rights, rethinking risks, and also redefining responsibility. And a panelist for this one, Piyush Gupta, Senior Director, APAC Tax and Global Transfer Pricing Concentrics. Joining Piyush is Abhishek Garg, AVP Taxation, Sterlite Electric Limited, Rezonia Private Limited. Joining them is Rajesh Thakur, Chief Finance and Strategy Officer, Rajiv Gandhi Cancer Institute and Research Center. Joining them is Mahesh Jain, Asia Pacific Tax Head, Corteva AgriScience. Joining them is C.A. Shalu Arora, Chief Financial Officer, Sirka Paints India Limited. Also joining them is Pawan Kumar, Associate Director, REA India. Joining them is Gaurav Chandok, International Tax and Transaction Tax Leader, EY GDS. And this one will be moderated by Bijo Palikal Thomas, Head of Tax, Group Transfer Pricing and Tax Operations, BT Group. Let's please welcome them collectively, everybody. Yeah, you know, we heard lesser applause than the people we have on stage. Let's try again, no? And welcome them. Lovely, thank you. Thank you so much.
Hello. So I thought since these are evolving concepts as far as we are concerned, it would be good to give a quick introduction to what we are going to discuss today. Hello. Hi all. So I thought since these the concepts that we are going to discuss today are quite evolving and quite new to at least some of us, I thought it would be good to give a quick introduction to what we are going to talk about so that we can have a meaningful interaction post that. So the first topic is on the pillar one, which is about the reallocation of taxing rights to market jurisdictions. That is where the services are, our products are consumed. So the OECD, after the 2015 BEPS 1.0 framework, they started working on addressing the concerns about the digital economy. They started focusing on the big tech companies to ensure that their profits are fairly allocated to jurisdictions where the services are consumed. But as time progressed by 2021, the focus really shifted to, that sector-based ring fencing was removed, and it actually started focusing on the biggest and the largest and the most profitable entities, the 100 multinational groups globally. So what it achieves is to to ensure that the super profits made by these groups are allocated to the market jurisdictions with a formulary approach. Just bear with me because you can see the screen there. Yeah, so it's basically applies to MNEs with a consolidated global revenue of more than 20 billion, and with a profit of, with a PBT of more than 10%. So there are two elements to pillar one. One is amount A and amount B. Amount B is about allocating the excess profits to the market jurisdictions, whereas amount B is not directly related to amount A, but it is just a standard approach to remunerating baseline protein marketing and distribution activities. So it's basically a TP concept. Okay. So the steps involved: first, define the pre-tax profit above 10% margin, and then 25% of that excess over 10% is allocated to market jurisdictions. There is also certain thresholds, like, for example, if a particular jurisdiction has revenue of less than 1 million, that is excluded, and then there are certain allocation rules based on which the profits are allocated. Now, some of the conditions around that is the applicable the EAF members who are signing up to Pillar 1 are expected to actually do away with the digital services taxes gradually, and also to if in case there are any unilateral measures in future, they are also supposed to reconcile via a conference of the parties, for dispute resolution. When I'm talking about the current status is actually stalled because of the political differences. There are ongoing disagreements, including for countries like India, Mexico, Colombia, etc., and Brazil. There are ongoing differences for the market jurisdictions. And then also there is a lack of the US legislative approval, which also actually holding the implementation of Pillar 1. As a result of that, the other concept, Pillar 2, that is going ahead. Okay. There are certain, there is some political agreement to put a moratorium on the existing DSTs. As you may be aware, there are existing DSTs in UK, France, Italy, Spain, etc. India has recently abolished it. Some of these countries have agreed to a transitional approach, but that deadline was December 24. That is already over. Okay. In October 23, OECD has already published a multilateral convention to implement Amount A, which requires ratification by at least 30 states, housing at least 60% of the ultimate parent entities of the MNCs in scope. Okay. But since there are still political disagreements, that that process has not moved on since then. Okay. OECD issued a final report on Amount B in February 24. But again, it has also incorporated the concepts of Amount B in the OECD transfer pricing guidelines 2022. Just moving to the next concept, that is Pillar 2. This is about reallocating. Sorry. Yeah. Yeah. So Pillar 2 is about ensuring that the multinational groups, the qualifying multinational groups, pay a minimum of 15% on their taxes in each jurisdiction where they operate. Okay. The objective is to address unfair tax competition and to avoid tax as the biggest incentive for shifting operations to low tax jurisdictions. So Pillar 2 applies to groups exceeding 750 million of threshold, and it has got two rules basically. One is the Globee rules, which applies the top-up tax of 15%, which includes IIR as well as UTPR. UTPR is a backstop rule. Okay, in case IAR is not able to, take care of all the, top-up taxes, then UTPR kicks in. Then there is also a subject to tax rule, which is basically about, allowing the source country to retain some of the taxing rights. So far, about 57 countries have implemented the Pillar 2 in one form or the other. India is not one of them, but there are announcements that India started working on a framework. The process includes a lot of data gathering, calculation, local registrations, and filing of returns. The earliest of the return coming up somewhere by June 26, and then most of the returns are due by June 27. Sorry, June 26. Sorry, September 26, and with a few coming also due by June 26. Just moving to the next topic on next slide on Pillar 2. It's basically about how Pillar 2 is calculated. You can find this in the, it's also in the OECD, the OECD commentary, and also the model rules, the appendices. It's basically identifying an adjusted PBT and the covered taxes with some calculations as referred to in the model rules, and calculating the ETR based on that, and then and see what is the shortfall compared to the 15% of minimum rate. While applying that shortfall, you also get a substance-based carve-out, meaning from the globe income that you identified above, you will also be able to reduce a substance based on the payroll cost and the tangible assets located in a particular jurisdiction. Mind you, it applies on the basis of a jurisdictional blending, unlike the US GILTI, which applies a global blending concept. So on the shortfall, on the excess profit, after reducing the substance, top-up tax rate is applied, and that is supposed to be first paid by the UPE. In case the UPE has not implemented IAR, then it will be paid by the next UPE, and so on and so forth. Whatever is left remaining will be tackled under the UTPR. Okay. Next topic is on ESG and responsible tax function. This is again an evolving concept, as you are aware. So it's basically about the three dimensions, ensuring it's a framework that measures the company's sustainability and ethical impact across the environmental, social, and governance dimensions. This is an evolving, still at nascent stages, though we have taken various initiatives for some of the top listed companies by SEBI and RBI climate disclosures, etc. in our country. But if you compare our status to the global, we are still at a nascent stage. So I have just included a comparison for your reference. Talking specifically about India's transition from a fossil fuel subsidies to a carbon taxation regime. We historically used to subsidize fossil fuels. However, in 2010, coal cess was introduced. And then subsequently, we also increased, by 2014, we also increased the excise duties on petrol, etc., effectively imposing implicit carbon pricing. And as of now, we are also working on a formal carbon pricing policy, whereby which we plan to launch, whereby we plan to launch carbon credit trading systems scheme by 2026. That's all as an introduction from my side. And in the interest of time, we will quickly move to the panel discussion. Piyush, the first question is to you. We discussed about Pillar 1. How do you think the reallocation of taxing rights under Pillar 1 will impact the multinational companies generally?
Thanks, Viju. And hello, everyone. Thanks for the introduction. I think you've already explained what Pillar 1 is. So I'll just quickly summarize it. I think Pillar 1 was basically intended to move the source-based taxation to a more consumption or market jurisdiction-based taxation, specifically for MNEs, and to tackle MNEs operating in today's technological environment, where you don't really need physical or employee presence to interact or act in a market jurisdiction. That was the intent of Pillar One, trying to tackle or trying to address all these issues around tech businesses and how they operate and don't pay taxes in jurisdictions where their market exists. One of the biggest ones being India. As you mentioned rightly, the current status, I mean, while it was supposed to allocate or redistribute the taxing rights to market jurisdictions, the current status of Pillar One, honestly, in one word, is actually it is dead. There's no consensus around it. There's no discussion around it. There were two big stakeholders in it. One were the MNEs or the countries where the big MNEs are located with a turnover of more than $20 billion, 20 billion euros, and having substantial tech businesses. We all know where they are, primarily in the US, and US is not even participating or engaging in these discussions. The other side of it were stakeholders like India and market jurisdictions, where the end consumer sits, who are going to probably benefit out of, Pillar Two. For them, from Pillar One, for them, Pillar One and Pillar Two was like a combined deal. And now, when with no action happening on Pillar One, effectively they are kind of abandoning Pillar Two as well. Case in point, again, being India. India has been very vocal and clear that for India, Pillar One and Pillar Two was always a combined deal. And with Pillar One actually being non-existent, Pillar Two is hard. In my personal opinion, is not really going to see the light of the day in India. So while the intention was right, but I think the political consensus on Pillar One is not going to really be there. So that's my take on Pillar One, honestly.
Okay, thank you, Piyush. Yeah, so thanks for those insights. Talking more broadly about it, even the US, to get the US Congress approval itself is a big concern as far as the US, engaging more into Pillar One. When we talk about, say, jurisdictions like India, India has got concerns about the arbitration clauses. So generally, we have been very resistant to global international arbitration. We want to protect our rights to decide our taxes. So which is one of the main concepts in Pillar One. The other one is, of course, we are concerned about whether countries will go withholding, because Pillar One, the amount, it's about allocation of profit. So some of the MNEs also may be making losses. So that way we won't get that share. In future, whether there will be any kind of pressure to actually give away our right for withholding taxes is also one of the main concerns as far as countries like India are concerned. Just going to a related topic on the significant economic presence concept introduced by Finance Act 2018, okay, which is also which is also one of the core principles underlining the thoughts about Pillar One. So, Shalu, what are the challenges that will arise when defining active presence or significant economic activity in a globalized world?
Okay. Thank you so much. So I believe earlier it was very easy to define the active presence or significant economic activity, but now with the globalization and digitalization, it has become very difficult because at this point of time, companies can earn revenue in one country while sitting in another country. So it becomes very difficult that which country will tax them. And moreover, there are no physical offices. Profit can earn from IPs, brands, right? And they are not limited to one country, they can grow multifold. So in this era, it becomes very difficult that which country will tax on what part, right? For example, moreover, there is no common definition for the same. Some countries says that you should give us the taxes on the basis of number of users. Some says that you should tax on the basis of transactions. Some says that etc and etc. So there is no common platform, there is no common definition. So it becomes very difficult, and there is a risk of double taxation.
Yeah.
So, and moreover, the value creation comes from various countries. It is not restricted to only one part of the world. So it also become a challenge to tax the income and to tax the profit. And with the challenge, there must be solutions as well. So there are so many solutions which Pawan would.
Yeah, Pawan, do you like?
Yeah, so thank you, Salu. I think rightly said, Salu, because active presence is now related, is not relevant to the physical offices, is now is a consumer base. So market driven. So wherever your market is, from there the pillar one is applicable. So basically, adding to the Salu point, there is one more challenges after the AI also. So let's say suppose the company is set up in a US and that here the content is using someone European country. So and the user of the AI is in India. So it's a valid questions in the department that from where this value creation is coming from this AI also. So this is very difficult for the to decide from where this value creation is created and how to we tax it. So this is also one of the challenges in that. So and every country, when DCT is applied, so every country interpret the significant economic activity in a different manner. So India is on the basis of the user and the revenue, some country basis of the user and the platform user. So there is no standard global definition of the this significant economic activity. So what happened in this DCT case, that every company that this is significant and wanted to tax and one global profit they are taxing. So double taxation risk is created there also. So with that, OECD in pillar one is suggesting a solution that rather than replace the physical presence, it lets we will talk about the on a revenue base. So let's decide a threshold. So it's a company. The pillar one has suggested a global threshold for company like a euro 20 billion and the company which has a 1 million euro, and basis of that if the company reach that threshold and that company if reach the threshold, then company will taxable in that country. And same way there is one challenges also. So when you talk about the data privacy and the tax verification actually, so let's say suppose a department ask about the user base to define your calculations and all that. But the DPDP and GDPR say that we cannot share the data user. So that's what the one problem is also. To reduce this conflict of the data privacy, what the OECD suggests is that let's talk about the tax on the basis of the revenue which earned by that country. So that's what the solution OECD is the second solution they have. And same way OECD also suggests, because if we are planning to a pillar one going to be implemented and to the local country to avoid this revenue DCT that have planned. So let's in a DTA to eliminate all the DCT in a single timelines. So that's what the one second solution, and that way the challenges will be pillar one is suggested. That's my take is.
Yeah, agreed. So SCP, though, was introduced by Finance Act 18, it's still, not being applied. It's kept as almost dormant. One reason is that it's still a negotiation tool, but there are a lot of restrictions in applying it because of the overriding nature of the treaties, etc. So pillar one will provide a solution to that if implemented. But as Piyush rightly said, it is still so distant, before it sees the light probably. Okay, so now recently with the Finance Act 2025, so we have rolled back the equalization levy, and so now that that means that we are getting there's a revenue shortage, and before pillar one get implemented, there will be some losses. So Mahesh, the next question is to you. How can tax professionals prepare for the DST rollback and shift to a unified global consensus via pillar one in an efficient and effective manner?
As I said, as my colleague said, the pillar one may not see the consensus. So what's happening in pillar one, the taxes are moving from, say, USA to the market jurisdictions, like countries like India, which in current political environment is very unlikely that any consensus will reach. So what other countries are doing, I mean, the countries want their share on the digital presence, some taxes on that. They are introducing digital service tax, DST. And DST is levied on the revenue. Like India also introduced 6% levy, so-called like Google tax, which was rolled back last time. 2% levy is still there, which is called equalization levy. So similar taxes are there in the European countries, similar taxes are there in Canada. And what I see, these kind of tax, maybe more and more countries may introduce so that they can protect their right on taxing these kind of transactions. So what as a taxpayer we should do if DST is there in some countries and we are a multinational company, have presence in multiple countries? I will say let's map out what all the countries where the DSTs are there, what sort of revenues we generate from those countries, create a sort of a heat map, understand what the implications on the organization. Once that is done, let's review their agreements in those countries, whether those agreements need any revisions. Because generally the agreements are entered by the sales team and the tax team are least involved on those agreements. Whether the amount which we receive need to be grossed up, like there's a 3%, 2% DST in some of the countries, and that tax need to be paid, and that's an additional burden or additional cost to the organization. Can that be recovered? Your pricing strategies in those countries that should be different from those countries where DST is not there. Can we increase the price in those countries by 2%, 3% so that DSTs can be recovered? Even your accounting also. In accounting, can we account for DST as a separate tax other than your corporate income tax so that it can be seen as a separate item and can be controlled, like how much DST we are paying, which countries we are paying, and it can be controlled better. So I think these are the steps which an organization we can take and maybe mitigate DST, and DST will remain because the consensus is unlikely to be reached. Maybe it's a dead animal, I will say. Yeah, and DST will be more and more prevalent. Maybe India has withdrawn 6% equalization levy. We never know, it may come tomorrow again. And many more countries, even for the Indian kind of multinational companies, we'll see DST is coming in many more and more countries. Yeah.
Yeah. The EU, even the EU had no threatened somewhere. They wanted to introduce. They discussed about having an EU DST levy, and even countries like Belgium has been trying to implement it for many years now, but just stopped because of the pillar one expectations. But as you said, it may never happen, and it all will come back again. Yeah.
Yeah, let's draw a plan around it. I mean, how to mitigate it.
Yeah.
And
Piyush, do you like to pitch?
I just wanted to give a very quick perspective on this. See, pillar one, in my view, was really the most important spoke in the wheel, because that is the need of the hour. What does the world want? That with the change in business models, with the advent of technology, new ways of doing business, is the market jurisdictions which are really not getting their fair share of the revenue. This was being tackled through unilateral DSTs or through introduction of things like significant economic presence. And that is where pillar one was very important, that it will bring some kind of uniformity. Now with pillar one effectively being in a limbo, more and more countries will start implementing these unilateral levies. And that is where it's going to be challenging for businesses and tax professionals alike, that now you have to deal with different regulations in each country and rules will differ. So like India, with our size, we may have a different threshold. A European or a LATAM country with their size may have a different threshold. And the other thing around these DSTs are that there's no clarity or there's no certainty around their credibility. Generally, in a taxation world, whenever these taxes are, you get credits in the tax treaties. That's what they're for.
Yeah.
But with DSTs coming around, like it was the case with equalization levy, which was in India, there's no clarity on how they will basically be creditable. So
Yeah.
that's where all these challenges will arise. India possibly, in my personal opinion, abolished equalization levy because it wasn't really generating the revenue it was intended.
Yeah.
So it was just creating an unnecessary compliance burden. So that's it. Thank you.
Okay. Thank you. Thank you, Piyush and Mahesh. So the next question is to you, Pawan, and Piyush, you can also pitch in. How are tax leaders addressing the overlap between DST's gross-based digital taxes and the OECD move towards Pillar 1 if that happens?
I think Pius and Mahesh ne, we have covered almost in the DST things. So only with the consenting of the time, I would say that the tax leaders is now basically is looking and actively engaging with the local finance ministers and the industry group that whenever you will a DST, let's decide on the consistent time to remove this GST. And also there could be a provision in the pillar 1 to provide this DST relief also. So that's what the first thing. And second thing, because whenever DST and the pillar 1 will come, because many country has still DST and pillar 1 will come. So it will be very difficult to simultaneously run and double taxation's risk is there. So there is a need for basically implementations of in nowadays now at time in ERP there is no kind of a system that you can track all these country wise or business line wise revenue, okay, audit trail, so that you can prove that your department also. So there is also need to be build a good ERP systems to track this all better manner. So that's what because India has moved, India has eliminated GST as PS, but many countries still applying this. So that way, I think a solution is that first that they are approaching engaging industry groups to eliminate DST in one go, and they provide a relief in pillar 1 also. So that's what.
Yeah, you mentioned about data, whether it be it pillar 1 or pillar 2. One of the biggest challenge that we see is in respect of the data, especially for a big multinational setup. Okay, so that is one thing again, and one has to prepare for in case pillar 1 becomes a reality, say a couple of years down the line also, then the biggest challenge is going to be the data. Okay. So just moving to pillar 2, I mean, again, this is a point that we have sufficiently covered. Going to pillar 2, which is about the minimum tax of 15%. Okay. So Mahesh, can you give an overview of pillar 2? How will it impact the profit allocation and the holding structures in the future?
So pillar 2 is the minimum 15% tax, and it's shifting the entire taxation strategies from locational arbitrage to where the substance is. It's like substance-based tax. So the low tax jurisdictions, if we set up any legal entities or we have multiple holding companies in between, so all those things need to be re-looked into. For example, if we have entity in say Dubai or Mauritius and the substance is less, but those were created just to have the tax arbitrage, may not be tomorrow, those will be taxed in some manner, right? But there are opportunities also because the way tax is computed in pillar 2 is different than what we compute generally in our computation of tax, right? So it's a jurisdictional based computation, not legal entity wise tax. Suppose in India you have 4 legal entities and pillar 2 is implemented. So all 4 legal entities put together will be seen. And if suppose one have lower tax, another have higher tax, so that blending is still possible. I mean, these are the way the things can be redesigned. The legal entity structure should be streamlined. Maybe the multi-layering of the legal entities should be reduced. Now coming on the incentives, whether the incentive has a covered tax, because the definition of tax is also different in pillar 2. So the incentive, if it is covered, maybe let's advocate with the government. Can they change the kind of incentive from covered tax to non-covered tax? Take an example like gift cities in India, which is exempt today, right? If pillar 2 is implemented, that will also be subject to minimum tax. Can that be converted into say cash subsidies or any other kind of subsidies? So these kind of things need to be worked upon by the companies.
Okay. Yeah. I mean, we have got some time constraints and we are relatively a big panel. So, Gaurav, how can the pillar two implementation is moving from concept to reality with the global adoption and the US kind of resistance moving more complexity to it. So can you share some thoughts from your side?
Sure. Thanks a lot, Biju. So I think before we do the crystal gazing, I think it's important to analyze what has happened in past 6 months in Pillar 2 world. Like Piyush mentioned, there's a Pillar 1 is almost, we don't know what's going to happen with Pillar 1, but Pillar 2 is also going through its own journey. Back in, I would say, somewhere in June, US introduced a section called 899, right, which was basically a kind of a target towards all the taxes, all the taxes like UTPR, DST, diverted profit taxes. So the idea was to implement a withholding tax or an additional tax on entities who are levying these taxes, which kind of caused a lot of ripple across the globe. Now, this was a big blow to the OECD program because having a Pillar 2 tax as well as an 899 would have been a major disaster. The G7 reacted pretty quickly on 28th of June. They came up with a plan where they wanted to carve out US out of the Pillar 2. Now, what does that carve out means? We don't know as of now, but that was the plan, right? Like to come up with a carve out where the US cannot be part of this Pillar 2 regime. They were supposed to introduce the regulations, or maybe I would say a blueprint, last Friday, but nothing has been introduced as yet. There was a glimpse that came on the OECD portal, which was pulled back in 30 seconds or so. So as of now, do we have, we kind of, is Pillar 2 going to continue? Would the 899 come back? We are not sure because China also wants a similar carve out. There are countries who are negotiating on their incentive schemes. Estonia feels that they still have, no, they should also, it's a burdensome thing. So I think, in the future, that's my personal view. Pillar 2 would exist. In what shape or form, we don't know because the due dates are about to come, the 30th of June and 30th of September for filing of GIR. So I think there would be certain level of compliances that we need to do. So yeah.
Okay, yeah, just one question. Abhishek, please can you talk us through the disclosure requirements relating to Pillar 2? Yeah.
Right, Viju. I think most of my panelists have covered all the questions related to Pillar 2, but the main question is the disclosure, what has to be made. And disclosure is very much dependent the countries who have enacted the law and who have substantially enacted the law, and correspondingly the countries where the enactment and substantial enactment has become operative as well. So based on this classification, the disclosure has to be made. The first disclosure, which is has to be made, that the application you will have to file, that the disclosure of the deferred taxes along with the reporting of the deferred taxes has to be made. Secondly, you will have to make a quantitative disclosure along with a qualitative disclosure. Under the quantitative disclosure, you will have to mention the average ETR which you have, and what is an amount of profit as in a group you will have and you will be exposed to once this global tax is introduced or applicable on you. You will have to mention that. Along with that, what is in which jurisdiction you are highly impacted. You are operating in the multinational, you are M&E group, and you are operating 27 more about jurisdictions. So you will have to mention which jurisdiction, which entity you are highly impacted. Though I believe this is not a very easy calculation, but still we will have to mention the jurisdictional level disclosure. The last disclosure I would like to cover is that this is for the organization where the operation is that you will have to disclose your current tax expenses, and the impact of the current tax expenses has also to be disclosed over there. So considering the time constraint, I'm handing over.
Thank you, Abhishek. Just one quick 1 minute or 30 seconds for you, Rajesh. Moving to ESG, what role can the tax team play in supporting the ESG strategy and reporting and compliance, of course?
Okay, thank you. Though last, but I think the different topic on ESG. So basically the ESG, we would rather take it from the what is happening in India and then match it to what is happening globally. Biju had already explained as to what is happening happening globally, which is very much moving. But in India, it is more pushing from the public side. If I say from the public perspective of ESG, so environment, air pollution and all, we as an Indians are pushing, but nothing happening from the government side. So you can say ESG, the environment is the main issue which is pushing. So the tax team, from their organization point of view, should take into account what are the factors which now the policy makers actually in India are looking into the ESG. For example, very quickly, I would say at the organization level, the government has come up with small initiative as to you should have a CNG generator of a big hospitals like setup. Otherwise, there would be a penalty. You discontinue use of diesel. Then there are smoke guns you have to install in your premises. Then you have a waste management disposable system. Then there is a measurement the government is doing on your ESTP plant. So all those things, though the tax team or the compliance team, I would say in a healthcare setup, would not be aware. So first and foremost thing is the mapping of these compliances, which are essential and necessary. And what would be because many of these compliances are like shutting down of any particular operations. So the compliance team, I would say, should be aware of all these taxes. On the other part, they should also be aware about what are the benefits which you can get to comply with all these things. So if you go for a green energy, if you go for a green OT, even for the bank financing and all, it greatly helps when you give all those compliances, though it is not applicable in India to any trust or any other small sector. It is mostly on the corporates, but yet small initiatives, solar energy, for example, we are going full way into solar energy, the entire setup of 500 bedded hospital. So these are the factors which the compliance as well as the tax team should be aware. Globally, things are moving very fast, but I would say the ESG of environment is more driven by the public world over rather than the government or the leaders. Thank you.
Okay, thank you, Rajesh. I think it was a very good discussion. We have got topics which discussions can go on and on for days, but I think with the time constraints we manage it well. Thank you so much. Thanks all. In case any of you have got any questions, please feel to reach out to us. Thank you.
Thank you. Thank you so much, sir. Thank you. And I humbly apologize to all of you on the panel because of the buzzer. It's just that a lot of them have their flights back home. And someone has a visa appointment as well, जो उनको 16 महीने बाद मिली है. And I don't know the reason of their cancellation for sure. But thank you so much. Thank you. Thank you. Your picture as well. For them, please. Thank you. Thank you so much. Quickly moving ahead to the next one, which is on the governance edge, how India's tax leaders navigate risk with precision. And to talk about the same, please join me in welcoming a panelist. Up first, Nipun Mohanka, Tax Director, India and Asia Pacific, Diageo India. Joining Nipun is Vaibhav Mangal, Associate Director, Taxation, Perfetti Van Mel. Joining them is Shrey Gupta, Head of Tax, Flutter International, Jungli Games. Joining them is Gurmeet Singh Sukhija, General Manager, Group Indirect Tax Head, Mankind Pharma Limited. Also joining them is Shailendra Jintal, Associate Director, Taxation Goodyear India Limited. And this one will be chaired by Sanjay Gulati, Executive Vice President and Group Head, Corporate Tax, IDT and Litigation, GMR Group. Let's please welcome them with your applause, everybody. Give them some confidence ना तो क्या क्या बात करें आपसे वो. Let's welcome them again. एक बार और कोशिश करते हैं. Thank you.
Okay, good afternoon, everyone. This session is really between the lunch and we are here, but thanks for keeping that patience and you're all available. The house is full. Grateful to all of you for being present here. So we'll quickly take this session and run through. We have a very good and esteemed panel here, highly experienced tax professionals. And So I'll request each one of them to have a quick introduction. To my left is Mr. Nipun. I'll request Nipun to introduce himself.
Yeah, good afternoon, everyone. I am Nipun Mohanka. I head the tax function for India and APEC region for Diageo India.
Hi, good afternoon, everyone. Myself, Shrey. I head the tax function for Flutter in India. Thank you.
Hello. Hi, good afternoon, everyone. I am Gurmeet Sukhija. I head indirect tax function for Mankind Pharma.
Good afternoon, everyone. My name is Shailendra Jindal, and I head the taxation operation for the Goodyear India. Thanks.
Hi, this is Vaibhav. I head the tax for the Buffetti Van Mill Group for the Samena region. Thank you.
Thank you, everyone. And now I introduce myself. I'm Sanjay Gulati. I'm the Group EVP and Group Head for GMR. And we are into airports and infrastructure and power. That's what we are. So here we start the session quickly. We see that the way tax reforms are going on and there are so many regulatory reforms are taking place every year, and particularly 25 has been the year of tax reform where we had direct tax, which has been new direct tax code, which was implemented, and then changes in GST 2.0, which was announced by the Honorable Prime Minister. Thereafter, we have regulatory changes and so on. So with this evolving regulatory environment, we have more particularly on the taxation side, both direct tax side and the indirect tax side, we have a lot of challenges for the purpose for the businesses, and businesses have to gear themselves up. They have to make themselves ready to ensure that they are able to match with the regulatory pace. The way the kind of scrutiny which is happening, so it's important to have the right governance framework in place in order to ensure that we are protected ourselves from any tax risk or any such challenges which come from the government. So, and the expectation of the government is also there, and which is true and correct, because the tax code is there and we have to lay our compliance process, compliance framework, etc. around that. And we have to ensure that it remains in place and it's rightly, taxes are paid and compliances are executed within the time frame. And the tax efficiency is built up and all that. So with this, I request Nipun to speak about the tax framework and the governance framework around that and how the industry is getting itself to match with the regulatory, expectations.
Yeah, thanks, Sanjay. I think governance is one of the interesting topic we are having in our industry, boardrooms, everywhere. So for me, the robust tax governance system uh, for tax, I would say, is basically looking into how do we turn no surprises into the DNA of the organization? How do we build that into the life of the organization? And over a period of time, this concept has evolved. The framework has evolved significantly. So let me share this with a story. So which you all of you can resonate. Early in my career, when we were talking about risk mitigation or managing risk, we were looking into the rear view mirror. That is, once the year ends, we used to file our returns. We used to file responses to the notifications or the notices, and finally defend our positions. Now, this approach may not be sufficient in today's world. What helps in today's world is the integrated governance framework, which is both forward looking as well as backward looking. So when I say forward looking lens, it means we focus on processes. Tax is embedded in each business process at the start of the transaction itself. Alok did mention in the morning that yes, how businesses are involving tax function for each and every transaction. So when businesses are making decisions, be it start of a new product line, be it change in route to market, cross charges, service agreements, and even people movements. All these things, tax is involved upfront. Clear risk appetite, standard playbooks, and kind of documenting the decision making. All these three things help in kind of navigating the tax issues. So that's point number one. And I want to just give you a quick example how forward-looking lens can work in an organization. So suppose an organization wants to set up or start a new management and control contract with its parent company. The authorities, there is one possibility that if you don't do anything at the start of the agreement, the authorities are going to come back for asking for benefit test, asking for margins, and all those things. So what an organization can do is to build a strong playbook governance framework to manage this risk. What you have in that playbook is clearly services are defined, the pricing methodology has been defined, and contemporaneous documentation is clearly documented. All this will definitely help in preventing your transfer pricing disputes by design and not by defense. So that's the key thing. How do you defend your position by design and not by defense? Two, I talk about backward looking lens. We talk about internal controls and preparedness for the audit. So when we talk about internal controls and preparedness, few things like robust compliances, reconciliations on real-time basis, and timely reporting to the management, coupled with AI tools. We talk throughout the day about AI tools. If you combine together, you are able to detect issues well in upfront, and you are able to respond to the authorities well in time. And what connects these two lenses, which is the forward-looking lens and the backward-looking lens, is basically the strong governance. So strong governance plays an important role, both in terms of how you protect in terms of future risk and at the same time your past risk. So in nutshell, if I have to say what a strong governance framework should look like, it should be an integrated framework which will help to kind of manage the risk for the organization, helping the company to manage risk and move with speed, but with the confidence at the same time. And lastly, in this today's world, managing speed and certainty are two critical things which define the strong governance framework.
Thank you. And it's so true. Without a proper and comprehensive governance framework, coupled with these two lens perspective, Nipun, you have given, it is very important that organizations need to be prepared. Now, I also look into to say that how would board looks at it? How board reacts to it? What are the expectations of the board and how do we present to the board? So I'll request Weber to throw a light on this perspective.
Thanks, Sanjay. So, in this world where, especially for the listed companies, all the tax related uh, risks and all the tax related issues are all highlighted, and you have to, present it to the SEBI and to the board. So it is very, very important that you speak. First of all, you need to be very, very upfront with the board. You need to mention that, okay, there is a risk. This risk is, let's say, more likely than not, or is it remote? And you have to have the real backing from, let's say, a council opinion, and you need to be very, very upfront on that. That is one. Second is, in terms of what is the cash flow impact of that for the organization. So you may take a call that you want to save the cash flow because you think you have a good case and you don't want to pay. So you take, you go for stays and those kind of things. But if you think there is a challenge there in terms of your, let's say, matter being a 50-50 kind of a situation, then possibly you may like to pay more tax upfront in cash, because then what happens is you save on the interest liability, which matter may take 10 years, 15 years to resolve, right? And then later on, the thing is that as and when you keep on evaluating your overall tax risk, and as and when, if at all you feel that because of the jurisprudence or any other things, you think that your case may become weak, or there is a good amnesty which is there, you may like to inform the board and you may want to settle the issue. So these are very, very important things. And the last thing I want to mention is that, the tax risk these days is very, very threatening for some of the organizations. We have seen situations like AGR issue in the telecom industry, because of which some of the the telecom players have basically vanished from the industry. Or we have the entry tax issue, or we have similar other issues where the whole industry has got impacted. So when you are taking any position, first of all, you have to have a proper reasoning for it. You have to be 300% sure for that. And you need to keep inform the board about what is happening, and it has to be transparent and speaking in their language. I think that's the most important thing. So I think very, very important these steps.
Yeah, no, that's very true. Again, what are board's expectation and what we expect from the board? I think both have to be aligned. And one thing is that the forecasting of risk is the role of a tax function, which tax function, updates the board. And gaming industry is one such example where, all of a sudden a kind of impact which the gaming industry has seen, which led to a huge unexpected demand of taxes, and second, which business had not factored, and third, their business continuity was basically impacted. And looking into that, I now go to a key tax hot topics. And one of such is that, the emergence of these, areas where, how do we plan for it? How do we, forecast those kind of tax risk? So over to Shreya, and kindly throw a light on the impact you had on the gaming industry, and how do you see this to be, managed?
Sure. I think we have heard the buzzer ring twice, but I'll just try to wrap it up quickly even before starting. So I think just like the buzzer here, the gaming law change was also a surprise to all of us in gaming industry. I mean, we were already fighting a huge billion-dollar litigation with the GST tax authorities in India. And then, this is one of its kind law which came in, which banned the gaming business completely over a span of 72 hours. Just to go back into the issue, because I mean, most of you are tax folks. I mean, initially when, the GST law came, all the gaming companies were paying 18% GST on the platform fee, versus the government then said that let's milk the goose even more. And then they said, we'll increase it to 28% on the deposit value. So let's say if there's a player, he deposits 100 and spends 10 out of it, we were now supposed to pay 28% on 100 rather than paying 18% on 10 earlier. Now, when that was going well and companies were doing well and the more and more players were coming, they decided to completely ban the law. Now, the irony is they have allowed two types of games. One is, social gaming, if I may call it, or casual gaming. And the other is the multiplayer gaming. Now, you would remember when GST 2.0 came, when the rates were subsidized, changed and everything, the gaming for that matter was still taxed at 40%. So it was treated as sin good, whereas the gaming per se was banned. So I believe the finance minister herself was not aware that PMO was going to ban the gaming industry. But having said that, right now, the entire industry is looking to probably foray into new business models and also trying to grapple with the fact whether a particular game form will qualify as a social game or not. Because even today, there's no specific rate for social gaming, just to highlight. And then a lot of companies, they're still in social gaming. So these are, I mean, some of the very key business continuity issues that we're facing.
Yeah, no, exactly. That's how the uncertainty need to be protected. And how do we forecast that uncertainty and prepare the board for taking a forward-looking call? And at the same time, the next key hot topic is the impact of tax, and what is the impact of tax, that is inverted duty structure. The inverted tax structure in GST is throwing another level of challenge, and post the GST 2.0, it has further enhanced the working capital on account of the inverted tax structure. And here I will request Gurmeet to please touch upon it.
Thank you. As I speak, I already see a time's up on the buzzer, but we were discussing that we have to speak a lot on various issues, but on a time constraint, ideas, honestly, amongst we are, talking a lot about the positive outcomes of 2.0, GST 2.0, the rate cuts and other things. But this is one of the fallout, I would like to use this word, the inverted duty structure. If you talk to any of the pharma, industry guy or FMCG or auto primarily, the inverted duty structure is a real issue. I mean, there are crores and crores of rupees which has been struck because, so for just a brief, that inverted duty structure is that when you have an inputs on a higher side and when you have an output on a lower side, it creates a accumulation of the input tax credit. And on a top of it, government does not allow a refund of inverted duty structure if it happens because of the services that you consume or the capital goods. Now, this is while we grappling with the inverted duty structure, there are other ways to it. We are engaging with the industry. We are engaging with the government on a various level, trying to figure out how can this be reduced. On an interesting note, this will also lead to reduction of the tax liability across. Even the government has acknowledged this, that the actual cash liability, tax liability is going to be reduced a lot.
I think working capital is one of the important factor because the margins are thin in businesses, and at the same time, it is important to protect the working capital. And accordingly, there should be a comprehensive approach the government need to take about the inverted duty structure and try to eliminate this kind of gap between the inputs and the output taxation. So over to Shailendra. The another hot topic is the intra-group cross charges, and we will just take 2 minutes to and then wrap up this session. Yeah.
Thanks, Sanjay. So I quickly, talk about it in the interest of time. So in most of the M&Es, the most common dispute is the intergroup service charges. So most of the M&Es set up a center either at a global level or at a regional level, like Asia Pacific, EMEA, or Americas, to provide guidance with respect to the best practices to be adopted, to roll out the standard policies or procedure to be adopted, to optimize the cost due to volume and bulk, and the cost of this center is then allocated to the various entities in various geographies on a reasonable allocation keys. So the tax officers, questions and disallow these charges, which is in an inconsistent manner, arbitrarily, without any, solid reason on a year-to-year basis on various grounds, but primarily because of 3 reasons. One is they say charges are toward the stewardship shareholders' activity. I mean, this is a routine guidance because they have invested money into India, so they have to guide. Second is the duplicacy of charges. They say, I mean, particular entity do have their team to operate, to do business. They're the board of directors. Over and above, these charges are coming. And the lack of demonstration of the need of these charges, the receipt of these charges, and the benefit derived from these charges. So there are numerous tribunal and high court rulings, but in spite of that, this dispute remain.
Right.
There are key 7 areas which the taxpayer need to take care. They have to maintain strong documentation to demonstrate the need of services, the receipt of services, evidences, the proper detailed working of the cost allocation, which India may not have the visibility, but at the regional level, and the allocation keys, maybe third-party certification, ensuring the, the allocation, and the proper agreement between the two, the right methodology to be adopted. So these are the few areas where the taxpayer need to do on a, not just after the year end, but on a regular basis, quarterly basis, I would say.
Yeah, no,
Thanks.
that's right. Intra-group charges practically has a perspective both from direct tax and international tax, cross-border transactions, plus you have an indirect tax impact on that. So in the interest of time, we have to wrap up this session so early, and considering the fact that taxation today plays a very critical role in terms of managing the profitability, and it impacts the P&L, and it impacts the bottom line of any business. So the proactive and pragmatic approach is necessary, and it is that the tax function need to be part of the business decision-making process, so that all the challenges what we are talking about today should not be a postpartum exercise, but rather a proactive approach will leads to integration of tax decisions with the business decisions. So with this, I thank my panelists, esteemed panelists, who have shared their valued and valuable inputs. With this, we conclude the session. And over to you for lunch. Thank you.
Thank you so much. That is awards, sir. हम मीठा पहले करेंगे. We'll celebrate first. And I humbly apologize for this time bit. I'm very sorry. But we'll do a group picture as well. Applause for them as well, please. For all our panelists.
So we are going ahead for the awards, right?
And thank you so much. While they get the stage ready for the awards ceremony, once again, a warm welcome to all of you to the inaugural edition of BW India Tax Leaders Awards 2025. Today, all of us gather to celebrate and honor the trailblazers in the taxation space, the pioneers who have demonstrated exceptional commitment and dedication towards championing the tax strategy in India. A big thank you to our partners as well. A knowledge partner, EY GDS, our event partners, the Thick Shake Factory, Joy Travels Private Limited, Reality Plus, Exchange for Media, IWM Buzz, Impact, Pitch, Phantom, and Beanley Coffee. For all the winners, we'll keep it short and sweet. Once you receive your award and you step down from the stage, please proceed to stage left for an individual picture, that is audience right. And after that, please also stay back for a group picture, both for editorial purposes. आपको भी picture online upload करते हैं, your opinion, views, please use the hashtag BW Tax Leaders Awards. With that, before we invite our chief guest on the stage, we also have a jury AV to show you the process of the awards ceremony. How did it happen? Can you please play the jury AV?
I am Parthasarathy VS, Jury Chair for the BW India Tax Leader Awards. It's been a privilege to lead the jury process. Reviewing the nomination was both insightful and inspiring. We saw strong technical excellence, strategic depth, and a clear commitment to governance and ethics. What stood out was the leadership beyond compliance, tax leaders enabling growth, managing risk proactively, and embracing technology and transformation. This all in the very first edition. To all the winners, my heartfelt congratulations. Your work sets new benchmark for the profession and inspires the next generation of tax leaders. These awards celebrate not just achievement, but stewardship and responsibility. Well done, and I wish you continued success.
To be part of the jury for the BW Tax Leadership Awards 2025. Reviewing the nominations was truly inspiring. Each submissions highlighted a strong governance and a strategic foresight. To the winners, my warmest congratulations, and to all the nominees, thank you for your outstanding contributions.
It was such a pleasure to be a part of the jury for Business World's India Tax Awards. Going through the nomination gave me a real sense of the incredible work being done across the tax profession in India. The depth of expertise, innovation, and commitment was truly inspiring. Our deliberations within jury were equally enriching. The discussions were thoughtful, engaging, and full of insights, making the process truly enjoyable. I want to extend my thanks to my fellow jury members and to our chair for the collegial spirit and thoughtful exchange of views. Even though our interactions happened virtually, it was wonderful to connect with so many professionals who are shaping the future of taxation in the country. My heartfelt congratulations to all the winners and nominees. You have indeed set the bar of excellence very high. I congratulate you on your success, and I wish you continued success and many more milestones ahead. And thank you, Business World, for making me a part of this fascinating process. Thank you.
It was an honor to be a part of the jury of the Business World Tax Leader of the Year Award for 2025. It was a very tightly run process with nominations coming in, and then the nominees had a opportunity to present before the jury. They could literally put up an elevator pitch to say why they're worthy of being considered, which also gave us as a jury an opportunity to interact with the participants. I think it was a very well-run process, and I hope to see these awards becoming more robust as time goes by and more coveted, so that more and more people apply, and it becomes a benchmark in the industry for tax professionals.
Thank you, Business World, for having me as a jury member on your evaluation of the best tax leaders of India. I enjoyed this whole process, and it was so nice meeting the best brains in the Indian indirect tax domain. And I would wish them all the best for their journey ahead. I look forward to more automation, more technology, and more tax compliance on that front. Thank you very much, and all the best to everyone. And thank you, Business World, once again.
Let's please give a huge round of applause to jury members as well. Also, it is my esteemed pleasure to welcome amongst us and now invite on stage our chief guest for today, S. Raviji, the founder of Ravi Rajan & Co. LLP, and also the chairman of TFCIL and former chairman of Bombay Stock Exchange. Everybody, let's please welcome sir.
Good afternoon to everybody. Thank you, Anurag, for inviting me here. Being a chartered accountant and having practiced for over 38 years, and also being on boards of many institutions, I know the importance of this award because the subject itself is complex, and it is also, it has many facets, including interpretations, how one deals with various opinions, how one does the compliance, and many other aspects come into play as far as tax is concerned. And with moving regulations, fast changing regulations, this has been one of the most, there have been issues of interpretation. There have been issues where even the SSC and the assessor both, or the tax department, have not been on the same page because there is a clear divide of the opinions or interpretations. And that too we witnessed during GST, what really happened in the indirect tax. There were a lot of issues which subsequently got clarified and still being clarified in many ways. Similarly, you look at transfer price mechanism, same thing. I saw the list of speakers and the subjects. It is illustrious, really good. And what I felt, even in transfer price mechanism, the methods that are used, of course, there are prescriptions to that, but there can be various interpretations to that. And you see the number of disputes in transfer price mechanism being very high is also is reflects actually the gap that exists between the person who is getting assessed and the department. So these are the challenges, and amongst these challenges, people who are in this room deal with these challenges, and they have to fight it out. They have to take opinions. They have to stick to their own sort of whatever they think is right. I'll give you one example, which is in public domain, is the insurance companies GST, which came in all of a sudden from nowhere. And of course, the GST Council later on gave an exemption to that, where the expenses, were all taxed. And what happened was, we saw suddenly you had a notice of 2,000 crores suddenly coming in from nowhere, and which was a big issue. And healthcare or insurance, which is there for everybody. The government's whole initiative is to see that insurance goes to everybody. The smallest, the universe has to be widened. But what happened was, we saw this impasse, which got later resolved between the department through GST Council and through various other, representations. It got resolved. So what I see is, there is a little bit of ad hocism does happen. Interpretation issues do happen. And amongst these are the set of professionals who take responsibility and accountability for all this. So means really compliments to all those who are handling tax matters. And I saw the jury members, jury chair, excellent selection of the jury chair and members. And I saw the list. It is very nice. I also know that it's very difficult to get an award. I have been a jury chair in many of such events of Anurag, and I have seen it is a very, I repeat it, it's a democratic and very good process, and a very tight process that BW runs on this. So first, congratulations to all the winners, and the lot of entries here. So that's also really a very good aspect, that people are showing interest. And I think these awards inspire each one of us to move forward and do better. And I wish each one of you in the room all the best. My best wishes to this, and I hope the next year award will have more entries and will be more competitive. My best wishes. Thank you so much.
Thank you. Thank you so much. And now to formally okay. We'll start with the award ceremony. May I please request Dr. Batra to join us on the stage, the chairman and editor-in-chief of BW Business and the founder of Exchange for Media Group, along with Ravi sir. May I please request you, sir, join us again on the stage. Sath hi mein also request Dr. Pankaj Dikshit, Executive Director on Board and Chief AI and Digital Officer of Signal.One, to please help present the first set of awards. The first, it is the category is Cross-Border Tax Strategy Expert of the Year. And the winner, please. CA Gopalakrishna Mahesh, Director, Financial Press. Hello. 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 Congratulations. Winners, don't forget individual picture and then group picture in the end. इसी के साथ the next category, it's Digital Transformation Tax Leader of the Year. The silver goes to CA Sudhir Kaushik, founder and CEO of TaxSpanner.com, a Zaggle company. For Sudhir, everybody. Congratulations. That was a silver.
You're very knowledgeable professionals. Apologies for running late. That's why I cut my speech. But I want to tell the tax professionals there's no GST on clapping. No GST on clapping. Can you clap for the winner?
Thank you, sir. That was silver. Now for the gold in digital tax transformation tax leader of the year. Bhumika Kenjali, Director, Indirect Tax, Avalara. Congratulations.
They say, sir was telling me while he was waiting in the room because he was telling me about a book which is about karma. And let me say that applause is also karmic. When you'll be up here, you'll need it. So build your karmic balance. You can applaud for Bhumika.
Thank you. Next, it's Direct Tax Professional of the Year. And the winner, please. CA Prayas Referral, CA Proprietor, Prayas Referral and Associates Chartered Accountants. We have with us CA Rajan Mehta to receive the award on behalf of Prayas. Congratulations, Rajan Ji, and also Prayas. Next one, it's Financial Services Tax Leader of the Year. And the winner, please. Amandeep Singh, Senior Vice President and Head of Tax, SBI Cards and Payment Services. Amandeep, everybody. Congratulations.
I cut my speech so I can take. By the way, Mr. Ravi is also the auditor he's also part of the audit team. And I must tell you, because it was an old introduction, he's also the chairman of 361 Wealth Asset Management. So Ravi sir is illustrious and is very relevant to what we are doing today. You could give him another round of applause.
Thank you, sir. Next one, it's FinTech Tax Leader of the Year. And the winner, please. Arun Chaudhary, Senior Director, Head of Tax, Razorpay Software. Arun Chaudhary, everybody. FinTech Tax Leader of the Year. Congratulations. आगे बढ़ते हुए next it is Innovative Tax Strategist of the Year. And the winner, please. Ms. Mansi Agarwal, Head, Taxation PDS Group. We have with us Abdul Rahman, Assistant Manager Tax, to receive the award on behalf of Mansi. Congratulations. आगे बढ़ते हुए next it is Media and Entertainment Tax Leader of the Year, and the winner, please. Alok Parekh, Director, Tax South Asia, Warner Bros. Discovery. Congratulations. May I please also request Sanjay Gulati ji, Executive Vice President and Group Head, Corporate Tax, Identity and Litigation of GMA Group, to sir, please join us on the stage and help us present awards. आगे बढ़ते हुए next it is Non-Profit Tax Leader of the Year, and the winner, please. Thank you, Dikshit sir. Thank you so much. Pratap Kumar Ray, VP, Finance and Governance, Smile Foundation. Pratap ji, everybody. Congratulations. आगे बढ़ते हुए next it is Technology Tax Leader of the Year, and the winner, please. Aparna Iyer, Assistant Vice President, Global Tax Head, Hexaware Technologies. Everybody for Aparna ji. Congratulations, ma'am. Next one, Transfer Pricing Leader of the Year, and the winner, please. Amardeep Single, Partner, MASA and Company. Amarji, everybody. Congratulations.
CA and tax guys are really dogged, huh? Let me give you a third reason why to clap. Clapping is very good for your heart muscles. It is. I'm not making that up.
Thank you. Winners and a visual picture. Please don't forget, after receiving your award, group picture in the end. We're halfway through. Next one. We come from individual to organizations now. This is Excellence in Sustainable Tax Practices, and the winner. Hygienic Research Institute, we have with us Mr. Sanjeev Roy and Manish Agrawal, Senior Manager Taxation and Finance Controller, to receive the award. For them, please. Congratulations. Next, it is GST Leadership Excellence Award, and the winner. Hindustan Zinc, we have with us Raj Kumar Gosa, the head of tax, and the team to receive the award. Congratulations. आगे बढ़ते हुए next it is Tax Excellence Award Industry Leader and the winner please. Car Union, Daiichi Life Insurance Company, we have with us Ramesh Agarwal and Siddharth Kumar Goyal, Vice President Taxation, Finance Controller to receive the award. May I also please request the CEO of VW Healthcare World, Harbinder ji, to please join us on the stage. While sir's coming, the next one is Automation and Tax Efficiency Team of the Year. Please leave in here. L&T Finance. We have with us Keshav Loyalka and Sanjay Agarwal, Finance Controller and Head of Tax to receive the award. For them, please. Congratulations. Next, it's Cross-Border Tax Advisory Team of the Year. And the winner, please. PDS Group, we have with us Abdul Rahman, Assistant Manager Tax, to receive the award. PDS Group, everybody. The next one, it's Tax Compliance Team of the Year. And the winner, please. Next, Aware Technologies, we have with us Sapan Iyer, Assistant Vice President, Global Tax Head, to receive the award. Next, Aware, everybody. Congratulations, ma'am. Next one is Tax Dispute Resolution Team of the Year. And the winner, please. PepsiCo India Holdings. We have with us a team to receive the award. Congratulations. And now we're on to our last Hallmark Awards. The first in this, it's Tax Strategy Team of the Year. And the winner, please. Tata Steel, we have with us Ms. Neha Junjunwala, Tax Center of Excellence, to receive the award along with her team. For them, please. Congratulations. Next, it's Excellence in Corporate Tax Compliance. And the winner, please. The silver, it goes to Tata Steel. May I please request Abhishek Gupta, the tax head and team, to come and receive the award. This is a silver in excellence in corporate tax compliance. Congratulations. Next, it's the gold in excellence in compliance. And the winner, please. Hindustan Zinc, we have with us Rajkumar Basak, the head of tax, and the team to receive the award. Congratulations. Our final awards, Global Tax Compliance Tool of the Year. The winner, please. EY Global Delivery Services. We have with us Raj Mohan Natarajan, Global AI Leader, EY GDS Tax, to receive the award. Everybody, Global Tax Compliance Tool of the Year. Congratulations. I'll ask two. This one is Emerging Tax Leader of the Year. And the winner, please. Saurabh Sharma, Assistant Vice President Finance, Axis Max Life Insurance. And after this, we'll do a quick group picture. All the winners are please requested to join us with their trophies on the stage. We have one more of this in a group picture. Emerging Tax Leader of the Year, everybody. Congratulations. Next one, it's India Iconic Tax Leader of the Year. And the winner, please. Nipun Mohanka, Vice President, Taxation, India and Asia Pacific, Diageo, India. India Iconic Tax Leader of the Year, everybody. Congratulations. May I please request all the winners to join us on the stage with their trophies. We'll do a group picture with the presenters who are here. Aye. It is 3:05. Dikshit sir, please. I also request you, sir. It is 3:05. 3:30, we will start with our next session. It's also time for lunch. All the winners with your trophies, please. Aye. 3:30 sharp, we'll start with the next one. We'll do two pictures, one with the presenters and one of the winners only. You can spread out, you can all spread out amongst yourselves. Malishi coach. But the ones who are there, you can all come this side also. Ma You can also sit Age if you want on the stairs. For mobile phones, quickly. You have 10 seconds. All the mobile phones. We're done. Naval, ready? That's it, sir. Okay, mobile phones, you can quickly do yours. You have 10 seconds. Chaliye, phones quickly. 5, 4, 3, 2, 1. Thank you. The center frame, everybody, please. Chalo, center frame. Inaugural edition winners, congratulations to all of you. We'll do one more, one more. Also, it is 3:20. It's 3:10. 3:30 sharp will start again. Thank you so much, everybody. Enjoy your lunch. Thank you.